Good morning, members. This is Rose. Today is Friday, July 12th. Good morning, good morning. 3 minutes after 9 a.m. Eastern Time. I'm going to have some background noise today. I have some work being done my location, so I apologize for that. I'm going to try to mute myself when I'm not talking, so I'll spare you guys of background noise. So I also have running fans in the background, all pointing to these computers due to no AC. It's been a couple of days now, so I apologize again if you are hearing a buzzing noise. Anyway, let's begin. We had 2 days ago, so Wednesday, really good move up, bullish start, although it started as dojis, but you can see the lower wicks on the bar 1 and 2 and 3. Bears try to reverse it back down, but they fail, so the bull bars start to close. However, even though you get bull bars, you're not getting good breakouts. Markets still went up, so any pullback they're probably going to buy, and they did. So when a move like this happens, market can continue at the open, but because it was very climactic, normally you expect a sideways price action trading range form and then a reversal back down or continuation up, or 20 to 25% of the time some kind of a trend from open. So yesterday started with generally the first couple of bars, especially the first bar. It kind of tells you how the next 6 bars, 6-7 bars into 10 o'clock will be. So you got 2 dojis. You're not getting trend bars right away. It's telling you it's going to go sideways. So there are probably buyers above 3 and sellers above 3. We didn't get a follow through, even though this looks like a 1, 2, 3 undershoot, overshoot wedge top. It was not enough. So no bear bar. That means this is in the wedge. That means we're going to make another high. So this is either that or that. You got a wedge. There are 2 types of wedge. So then you get around news hour with bar 7. You got another breakout bar 6 and 7 above the high of yesterday. You're thinking that this could actually get a breakout or pull back to the high of yesterday and then find that area as a support and continue to go up. But the problem here is that bar 8, it's an outside down bar. It closed below the it closed below the high of yesterday, and it's an engulfing bar. You already got 2 types of wedges there. You also have take a look at here. You have a double bottom. You have double top, so failure over failure, right? So it's kind of a swing, right? But the problem here is that these are inside bars, inside within the trading range, not necessarily inside bars of an outside bar. It's a trading range, but it looks like it's breaking out. When a breakout fails like that, you get a breakout bar. Okay, that's fine, but where's the follow through? And then suddenly you get this. Now you're wondering if the market is going to come down and take out that. Now you have 2 bear bars, bar 8 and bar 9. So if you're long, if anyone's buying right here, they're not getting any kind of a break even. So price is not going in between the average point of bar 8 and 9. You're not seeing any wicks, any bars with wicks to get those bulls out, right? So many bulls are stuck there, and you get a gap bar like that, and you have 2 bars like that. So my initial measurement was, I'm going to take those 2 bars, entry on 1 tick underneath 9 entry, and a stop above bar 8. That's my measured move right there. Look what happened. Markets start to take profit, but you got bulls buying here. They're not able to fix anything. So if anyone bought underneath this bar and then bought again, possibly is the close, right there, they are not getting any kind of relief here. So that means you get a probability of another leg or two down. This is way too strong. You got gap bars here. So here's the 2R. Now I have a bigger, right? I can also, several different ways to measure measured move. You got 3 bars with gap. You can also put it right above and a stop there. That's your measured move. That's your 2R. That's your 3R. That's your 4R. Or I generally take the entire leg. Now I have more information to go by, and the market is still making its way down, right? And bulls are not, they're printing bars, but they're not able to get follow through. They're getting trapped every time they buy. They might be gradually exiting out of the market. They know that this is going to come down. So this is your measured move right here, and look how many bears start to take profit. You got a leg 1 here, pull back leg 2 here, pull back leg 3, or the whole thing is leg 1 from is bar 8 high to bar 19 low, first pullback, second leg, second pullback, and then the third leg down and sideways, double bottom. There's a wedge here, 27, 31, 44, double bottom, some kind of a reversal. I don't think the reversal is going to be all that strong because this is a very strong tight bear channel. When the channels are tight, you don't want to buy against it. You might have a two-legged reversal, especially as you got so much gapping bear bars from underneath the moving average. The first pullback at moving average, probably sellers are eagerly waiting to sell again. So you look for new lows, but now the bulls started to print some decent bars. This right here is a sign of market is going to go sideways. Bulls are going to buy and make money, but only to take profit at the moving average. So if you're a bull, you got limited, right? You got limited amount of points that you can make here. You should not be expecting a V-shaped reversal or sharp reversal. How would you have expected a sharp reversal? Then you would have another bull bar, first pullback. They would keep buying. We could have maybe got back to the bar 9 or further back up, but we never got that. So that right there is a sign of trading range trading. That's going to last a long time. So measured move. Now we're in the trading range. So trade it as a trading range. If you look left, right, so look at here, there's a gap here. I always like to measure these gaps. Mark those gaps, right? So that would be the gap. Gaps are generally, I mark them white. Okay, there are buyers waiting here. So strong. I see these trend bars, right? These trend bars. It's like, think about it as a sailor's perspective. This is the ship going south, right? And found a good place. You see something like they're throwing an anchor. You see this right here? Okay, I look at it as this is too strong. They're going to throw an anchor, okay, here because they want to hang out here. And they want to push the market further down. See this bar, bar 10? I'm definitely going to sell and make money. See this bar 23? I'm definitely going to sell and make money, especially I get one bear bar, that's at least one bear bar after that is follow through. Now you're getting this bar, but you're in a trading range. So do you think that you can sell this bar 40? Well, it's a midday. Everybody's looking for a midday reversal. Many traders saw a pattern inverse head and shoulders with a 27 left shoulder, 31 head, and 35 right shoulder. But look what you're buying into, a trend bar. Probably bears are going to defend because their stops probably trailed from here to here to here. And there's a gap here. They want to move the stop further down because they're looking at this area as a area of interest. So look at this right there. There's several actually. There's one right here. It's small but mighty. Look at the amount of breakout that took place, right? So you know that this is going to act as support. We're going to test it twice. We're going to test it twice before is either breaking or breaking out of it. So since it was very strong, this is like a foundation to a skyscraper, right? So you can't drill in all that fast. So the breaking the support is probably it's going to act as a support. Selling, 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 selling is bears know that they can't. They're testing it. Here's the first test. Here's the second test. First test created a beautiful bar outside up bar 44. First sign, oh, buy orders are strong. But you need to wait for a second test. Now you're getting two, like 56 and 57. Many people buying above 57 because it's a decent close and 2 bars. So you buy it, but you have limited, right? You're going to test probably right here or somewhere. I did say on Discord, I was trading this with a bunch of people. I said the bar 38 is our target. I'm going to hold it into bar 38 area. And then I also did, there is a wedge here. It's pretty parabolic, but it's there. I actually marked it. Several ways I marked it. So if this was the low, I considered this whole thing as a leg. So this is the first pullback with 2021 and a second leg and a second pullback with 36, 37, 38. So you can literally mark there. Or another way is if this is your leg and this is the first pullback, okay, you can, and then second leg and second pullback. So we never got there, but we're probably going to eventually get here and then sell again, right? Or you could say, hey, this didn't work for me, so I didn't really use it. So market did reach this area, poked above it, but couldn't get follow through buying after bar 67. Came back down because there's a gap here. So they're testing this gap with bar 61 to see if there are any buyers here, right? Look, comes in is unfortunately bears close that gap. So if you buy again, probably you're not going to get a follow through, right? And it did come down. So market is stalling, and until bar 75, if you have sideways bar more than 5 bars into bar 75, you're probably going to get a fake breakout up or down, maybe with 1 bar, and then it's going to come back and close inside that trading range near 75 or moving average. So I did tell everyone that even if it goes up and down, it's just you're not going to get a big breakout. It's just going to be a 1 bar trap, and it's going to come back and close around the moving average. And that's exactly what it did. So there's no, you see this, don't trade this, especially if you have these gap bars, right? And you're not going to get a reversal. Sometimes you get good reversals, but only if you don't have good gap bars. And there's a trading range here. They got big down confusion. In order for bears to sell this, and most likely they will come back and test these lows, they need to break this this area of interest. So I'm going to leave it on the chart. Okay, so we had a really good first breakout and then pullback turned into a reversal. Strong bars. Market is definitely bearish, but overall market is bullish. Okay, if you look at the hourly chart, overall market is very bullish. We might be just getting a pullback. Remember this a couple of days ago? I put this line and I put this line. I said, if we start to come back, we're going to stall around this line. This is the target. So you could have used this trend line as your target, and we are kind of, stalling over here. So what does this mean? Is if we're getting a double top at the moving average, we might need to get a wedge top. So we might actually go up, get a wedge top, and then break, and then move towards the 50. I think that's EMA or SMA, but that's red is 50. And that could act as support because we do have breakout levels here in a small trading range. So we might come in here and then reverse back up again. So this could be just a deep pullback and then reverse back. Or if we start to become bullish at the open, there's this gap here. There will be sellers in that hourly gap. Why? Look at the behavior here. You got a breakout, you got a bull gap bar, and a bears are totally violating that. So that means when you pull in there, probably you're going to look for a double top formation is, and you can sell again. Okay, but this is support. If we break the support, then we're definitely going to come in this area. Okay, could end up selling into this area, but overall is bullish, so the market probably wants to go and test the highs. So I'm going to look for, because this is strong, maybe retest the lows, find some support, and reverse back up. If we become bullish first, then I'm going to look for sellers here, reverse back down. So we do have an outside is on the daily is we have reached my target from this bar's breakout but the we got suddenly bears, and this is an outside down bar. It's got an upper wick and it's got a lower wick, so it's kind of is, you know, spinner, but with a strong bear body. Might get follow through, but also can find buyers. Bears want to close these gaps and move underneath into this bull gap area, but they're going to have to keep selling. This is a daily bar. I think we're going to, because it's a tight channel, I think we're going to reverse back up. There could be buyers underneath this bar, bear bar. They could just buy and look for at least 50% pullback into yesterday's range. So Globex chart it's not all that. It's only 25 points wide. So can you guys hear the machinery? Did you just hear it? That was pretty loud. No? Oh, that's good. So it's canceling. Okay. So we do have somewhat, it's a good close, but it's 2-bar reversal. I don't know if we're going to get sellers at the open. We might need to pull back to the 50% and then sell from there. So at the open, we could get a pullback. So I'm looking left. What do I see here? Look at this bull bar. That is a bad buy signal bar, right? It trapped everybody above it. So we'll probably going to test this area. And this area is going to act as is resistance. Okay, that's pretty. And it's going to be a strong resistance if we get there. I'm going to look for sellers here in this area, okay, and in the 50% of it. So I'm going to mark the 50% of that as well. So we do have 1, 2, 3. Where are we right now? We had an 8:30 news. Today's Friday, so weekly highs, lows, monthly highs, lows kind of is important. But since we're in the middle of a month, it's not that important to have the monthly highs and lows. But the weekly highs and lows could be a good magnet. 5,700, we came so close to it, which is a round number, and the market failed to test. It wants to go back there, but they have to break this area strongly. What can market do? It can just keep grinding up, right? And then it come down, everybody starts to sell, only reverses back up. That will create a one big cup. And then the next week, we could have a handle and a breakout again. So only if we break this area strongly, then we're going to go and test these gaps. And these gaps are still going to act as resistance. So market has to do something today that's strong enough to reverse this. Otherwise, we could go up here, come back down, retest, and then I would look for, again, buyers, maybe trap the sellers. Or we go up and we start to sell. I'm going to look for a lower high and sell further. That's the low of week. That's June high. Another magnet is mid last week, another magnet, and the low of last week. But we need catalysts to become very, very bearish. Market is overall bullish. So this, to me, looks like they're looking for a good price to buy because it's too high to buy. It needs to pull back, right? So I'm looking left. Where else can this go? This area seems like a good place. I'm going to mark that. I'm going to mark the whole area. I don't like to do that, but since it's a tight space, tight range, we could pull here and June high is there. But you know what? I'm going to stick to my rules. I don't like to mark the whole range. I'm going to find the heart of that range. Still not all that great. I think that's better. So we could pull into here if we become bearish, and the buyers probably would be there. Missing anything? There is another trading range area of interest here. That's actually a lot stronger. Breakout, pull back, a slight breakout and the breakdown. So a lot is being tested around here. So I assume this is it. Yeah, somewhere in there. So if we do come down first, these are support, then we could go back up and we'd be stopped here. Or is we go up and we can come back down and we could stall here. Okay. So I found two areas of interests. One strong sell zone, and that is right there is PPI from 8:30 a.m. Eastern Time. We are above the key price level, which is Asia high and midnight US open. If we can find buyers and a breakout, we're probably going to come to somewhere around here. That's 57, maybe even higher, 61, 65 area. That's around this area. And we could find sellers there. Okay, so that's what I'm looking for. Let's take a look at the weekly bar. Weekly bar, oh, sorry, that was my target from a couple of days ago. And we reached that target. That was the measured move, and then we started to come down. We trapped the bulls right there, and then we came down, but it still closed bullish, but it didn't close above its midpoint. So this isn't all that great, strong bull bar, okay? So I'm, but if we start to get bulls again somehow, and the bulls start to close this gap, but that again, remember, this is a weekly bar. Next week, if we can find some buyers, maybe underneath this bar, somewhere here maybe, and next week starts to fill that upper wick, that's momentum, right, for bulls, is we can finally go to my measured move target. But that's for next week. So this week is looking for buyers again, I think. It could still close on its high. I just don't know. What if it closes on its low even further? What if it becomes a lot more bearish? Well, in order to do that, it needs to go up a little, then start to sell. It could close around here. And then, because it's a breakout test area, bulls can still show up there. But that puts us into a bigger trading range. So it's not a good buy signal bar, but it's also not a good sell signal bar. We could also get an inside day today. Weekly chart has this measured move targets, and we've gotten so close to it. Market is still pushing. This could be just a pause, and next week could be an inside bar going high. If next week closes higher, we're definitely going to get the 300%, which is 2R of this bar range projected up, and that's right around there is measured move target. So yeah, I think the market is still bullish. It's just a pullback, I think, to give a chance for bulls to enter long again. This could put us into inside outside. We could get an inside day, and the inside outside inside. It could create even a flag here, final flag, for us to go back up, and then we can perhaps come back down. So I think we're gonna try to get back to the highs again, unless we start to sell today. But I think we need to trap the bulls first above this trading range. It is a triangle right now, and we have a double bottom, and we have a higher low. It's kind of trying to squeeze. So squeeze doesn't happen all that quickly. It needs to go up. Everybody buys it, and it needs to come down, moving average. Then you buy again. Then everybody, if this squeeze fails, everybody is buying. It could sell right back down. So that will create a expanding triangle with the apex here. We move underneath that apex, or the mid-range of that trading range. And then we come down and test the lower trend line. All right, market is up and about. We have a 25-point range. Not all that is large. Okay. We have a small gap up, testing the trading range high. How many legs do we have? Leg 1, leg 2, leg 3 for bears is possibly leg 1, but we made a new low. So maybe leg 1, leg 2, leg 3 for bulls. It's trying to reach up here. Let's see how the first bar closes. News-wise, we consumer sentiment at 10 a.m. with the close of bar 6. We're going to get quite a bit of room, quite a bit of move. And then there's nothing, but I'm sure there are some Fed members, being it's a Fed week, Fed members are going to make some speeches today. It might just trickle in. I don't know. Nothing's on the schedule on econoday.com, but it could be, it could show up. We could hear something, so. Trading range is, you always get 75% of the time failed breakouts, but we have a higher low, and it's trying to squeeze out. It's trying to close this gap. We have a bigger trading range here, so gaps are magnets for bulls to at least try to close, but I think there are sellers here. This bar 20 is placed by institutions to trap other institutions buying into it, and then immediately sold. Other institutions scaled in here. They want market to come back to the bar 20 and high. So those institutions invested in this bar wants to get their money back. Well, we need bull bars to close, bar 1 and 2, to get some move into here. So right now you have a trading range open with a slight gap from moving average. These kind of gaps do close quickly. All right, so you have a doji. The first bar generally tells you how at least the next 6 bars will be like. So the next 30 minutes before you get any kind of breakout, if the second bar is not a bear bar and not closing on its low, you're not going to get a trend very quickly. It could be sideways, up and down, up and down. So trading range open. Bulls need to close a bull bar above open of the day to turn day slightly, morning slightly bullish. So I need a bull bar closing and testing bar 1 high. And then getting, because it could be a leg 1, first sell failed. Leg 2, there might be some sellers above bar 1 waiting to sell. I'm doing nothing here. I don't care to scalp anything here. I don't have the guts to buy and swing either because we could come down and close this gap. Bears want a second sell, and the top of the trading range is a good place to do that. So they might do that if I buy anything here, hoping that the market could get there. But if I start to see bull bars, oh yeah, I'll buy. I'm going to bet against, bet with the bulls for closing this gap. And I have enough room to the upside to make some points. But I'm not ready yet. The last thing you want is to getting trapped in a bad trade from the get-go. And then you spend the next hour or so trying to fix that trade and break even. And that's no fun. And today's Friday. It's a happy day, right? Don't put yourself in a situation like that. Just be selective. Fridays we get good news, good runs that you want to hold on. So, oh, hang on a minute, everyone. Sorry, everyone. I've got a lot of people walking around and asking questions, which I hate that. But so there's some interruptions. All right, so the market is trying to get back up here, but I need a bull bar, so I'm not touching this. Like I said, there could be sellers above bar 1. We get a third leg too, so I want to see a bull close, is leg 1, pull back, leg 2, and then go up, pull back, leg 3 into this zone. I just want to get that bull bar first. If you want to buy, at least buy small, because your stop is far away. When the stop is wide, you use wide stops, you have to trade small, okay? You can still make enough points, or even with small, trades, wide stops are risky, but if you're looking for that gap to close because you believe that market is going to go there, and you're in a big trading range, or the 50% of yesterday's range is the 50% pullback is the target, which is right here. We're about to hit the 33% pullback, which is right there. So you can buy, but buy small because probably the sellers are above. Excuse me. See, some sellers showed up there as expected. Because if anybody have sold bar 1, disappointed with bar 2, they see a small 2-bar trading range overlapping greatly over 100% overlapping 2 bars. They're going to sell here and they're going to try to close the bar bearish, or at least get closer to where they have sold so they can break even. So here is the close of that bar 1. They might have sold the close of that bar or sold higher. Since it's limit, I'm going to measure from there. And they already reached the average break even. That's it. So it even moved 1 tick under, or maybe not. No, yep, it did. So you see that? See how that worked out? And now we get a bull bar. I'm going to buy because I wanted to see those bears exiting out. Now, I'm not 100% sure yet. This bar hasn't closed, but look, there are buyers probably now above bar 2. But I prefer bar 2 again close. But you see, that's quick thinking bears. Now, who are those quick thinking bears? They are machines, right? They know it. So now this is trying to go up. So very nice. I see the bears did get their break even right there. They might continue. Now the bulls can continue to go higher. Now, this is not a true breakout, though. This is the trading range high, bar 38. We don't have a breakout. So other bears are still trying to sell in the scalp area. So you do have a scalp there. But the bar close is bullish, then we can continue in this zone right here. So this is the, I'm not sure I did that. Okay. This is the halfway back, 50% pullback, whatever you use, right there. That's the 33% pullback, so there's some scalping here naturally. Okay, that's the yesterday's range, 33% pullback. We close a bull bar, we're going to go and probably test the halfway back up. This is the midpoint of a strong sell zone. possibly sellers there. That's midweek. Possibly sellers there. That's midweek. And then this one is okay, this one is 66% pullback. Right now they're taking profit there. But I don't think this is okay yet. I like to see market go up a little bit more. Unless we move below open of the day and start to close below bar 1 bear bars, then that's it. This is where we're going to sell. But I doubt it. But if we do close below open of the day, then market has potential to come down. It might come down underneath the moving average and look for buyers there. %33 rejection, 33% pullback and rejection. So it's trading range open, so you can see bars are overlapping. Bulls want to get back to the high of bar 2. So they're buying underneath bar 3. If they close a bull bar and then around the high and the close of bar 2, they're going to push higher. From the ETH chart, from the well, I think the target for bulls is 56.56 and a quarter, or 56.55 and a quarter. Could go higher to 56.64. I did go long from underneath bar 3. I'm looking for midweek test and see if we can get to the 59.25. But first, I'm going to scalp one tick underneath 56.55 if the market can get up there, because that's pit stop. 56.55. Machines always put a sell order there if market is coming 4 or 5 points from under. 56.55, 56.45, 56.65, 75, 85. These are all pit stops. So I'm going to scalp around here, one tick under 54.75. Give myself a thing, and I'm going to hold a runner which is 56.65. First, I want to get this. First, I mean, I think we're going to go and test 56, 57, 50. This should just, you can't hold it. You don't have to scalp anything. But it's a trading range. It's trying to break out from the trading range. This is a squeeze. Squeeze, everybody buys, and only it just reverses back down. So that's why this area is a strong sell zone. That's why I want to give myself a scalp here. I have yet to scalp. I should have scalped. I can scalp, but I just want to hold it a little bit because I did buy down here. There's plenty of points here that I made, but I just want to stay in this trade a little longer for the scalp. About 10 minutes and 15 seconds to the news. Consumer sentiment coming up. It's going to be a big move, up or down. Probably up and then trap and then come down. Because why? News bars always look for resistance and support, and here's your first resistance, possibly even a little bit higher because 1, 2, 3 bear bars. So we might even test bar 12 and then come down. It's a strong bull bar. So the 33% pullback of bar 4 to the 50% pullback of bar 4, limit buyers waiting. Possibly 56, 52 they are buying. ATR is 6, 56, 52 plus 6 is 56, 58. So approximately 5 to 6 points it can go higher one time the ATR. it will scalp half the ATR around 3 points where they bought. So they just started to buy around 50.75 at about 3 points. That's 53.75. Could go to 56.75. So 56.75 to 58 area is, I think, target for bulls. I'm just reestablishing my data connection. So just give me a second. I have some lingering orders on the chart. I don't know what's going on. Okay, that's gone. Let's just get rid of this. It's just going to update in a second. Just give it a minute or less. All right, so I have scalped, but I'm holding a runner. There's still 5 minutes to news, so it's still safe, I think. But you should wrap it up because you got a leg 1, pause, leg 2, pause. We're in the leg 3. So it's trying to get to somewhere in the mid-range to the halfway back. We could reach there and then come down perhaps, but I would look for a double top to sell. So very good job. I'm still holding this, but I am going to exit out of this before news. So I'm basically on my, I'm getting ready, okay? As soon as this bar closes, or right around now, I'm going to take profit. I don't chance with the news, especially on Friday. Sellers could be right above, but institutions who have invested in bar 20, which is a trap bar, okay, that it's intentionally put in the market to trap the bulls buying that bar. They're trying to go one tick above bar 20 is to claim that money they put in the market yesterday, okay? So that's our friend Jenny, okay, from the X Capital. That's an imaginary, broker. We call her Jenny because she's super smart. She knows how to trade, and you know the story. This is a joke, by the way, but if you're new to the trade room, sometimes we joke. Is you don't hear Elle or Brad joke at all. They're very serious. Although sometimes Elle Brooks drops a couple of bombs. I think the last time he said something juicy thing. I'll never forget that the rest of my life. I was like, did he say that? Oh my God. I do joke a lot. It's Friday. I'm a happy person. Tim Stout and Tim Fairweather, they make us giggle time to time. But if you want absolute seriousness, definitely Brad Wolf and Al Brooks are your streamers. So I'm happy because I've already cashed in, and this is great, but it's going to go up and test the halfway back 50% pullback. So if you have bought underneath bar 3, great job. Market has already gave you 15 points. Could actually get a lot more. So, but I would definitely start the scalp because we're getting very close to these news, except that my timer is not there. So just about news. So I'm going to put you guys on hold a little bit to turn on the timer. I don't know where that go. So just give me a second. Here comes the news. Toolbar. Why is toolbar not working? Let's add that toolbar clock. There we go. Should work now. Yep, it's working now. I mean, we're not comics, right? Everybody knows that my jokes are not everybody's taste, and I try not to joke too much. The Fridays are special. We get good moves on Friday, so market could make a 20-point, but this is where you should be paying yourself. There's no sell signal bar yet, but it is the news, so I'd be careful here. It's still trying to make its way up. Oh, we just tested the bar 20 high. Can it go higher? Yes. The next one is 33% pullback, somewhere there to here. So we can also test right there. Just a little bit and then come down. But you should be taking profit the halfway back. But all this is here is resistance, okay? Institutions, not intuition. What is the intuition? You're asking why would I buy underneath bar 1? Well, what does L say? What happens at the open? Like, what are the telltales of signs of, if we're going to get a pullback and buyers can buy? Look at bar 1 and look at bar 2. They're overlapping bars. Bar 1 is a bear close, but it's a true doji. So, there are buyers underneath, sellers above. There are two types of bars, right? F, two types of bars. So what are those bars? It's in the course. There's a trend bar and there's a trading range bar. Bar 1 is a trading range bar. So what does that mean? Is just trade it as a trading range. Buyers underneath, sellers above. Bar 2 is a trend bar, but within a 2-bar trading range and at the high of a bigger trading range. But it is a really decent close. So if you're going to buy, probably buying the pullback is a good idea. But everybody else probably did buy the close of that bar, right? So people also sold bar 1, and they sold higher above bar 1 to break even with bar 3 or bar 2. I would say 3. Then look what just happened there is bar 2, people who bought above or the close disappointed. What do you think they're going to do? They're going to buy the pullback, right? Probably underneath 3. You should wait for bar 4 to close before buying, right? And that's what I did. I did buy here, but I bought a lot here. So I did put a 1 order there because I know anybody bought bar 2 will want market to get back to the 2 high or the 2 close, at minimum in the middle. So I did buy only 1 contract. But here, with the close of bar 4, that's leg 1, pullback leg 2, that's an engulfing bar. I'm buying above it. I literally hit buy with the close of that bar with, I think, I was in 1, let me see, I bought 4 more contracts, and then as this started to go up, I'm taking profit and taking profit and taking profit. And then right around bar 6 close, I exited with the mid-range. I didn't care for the halfway back targets. So there you have it. This is already getting a reaction here. Yes, correct, Ox. So I measured yesterday's trading range from high to low, and I looked for pullbacks because I saw the double bottom, wedge double bottom, higher low, and I looked for this trading range high to be tested. Because this is a bigger trading range also, we're going to start to close these gaps. At least we will try. Market will eventually want to come back and test these lows, but it needs to hit some kind of a resistance. Okay? So what does that mean? Can we sell here? I need second entry short, and I need a good sell signal bar. I see nothing. As far as I'm concerned, market can get above 50% pullback and get to the 66% pullback of yesterday's range. There are more gaps up there. But let's see. If we get a strong bear bar, that's going to be your first sell. I'll probably not going to sell that. And I would look for a second entry short with a much better bear close than I would sell underneath that bear bar. I don't have anything here yet. Oh, yeah, I think we have been always in long with that bar 4. And then you have a measured move target probably, which I didn't measure, but I figured you guys would figure that one out. You can use the whole thing. I think this market is trying to push up there. That's what you can even If you want to stay conservative, you can use that as your measured move. But I like to see a good bull body breakout, which is right there. Then that would be a lot more ideal, which is around the 66% pullback anyway. So what do you need for follow through? Is you need a bull close above 50% pullback, which can push higher. I don't have a sell signal yet, so I don't want to sell anything. It could go up a little bit more and test the bar 12, because after bar 12 yesterday, market trapped the bulls. So a lot of bulls are trapped there above 12, and then created 3 bear bars. What is 3 consecutive bear bars? It's a sell strength, okay? And then many bought and tried to break even, but many have not. And then it just dumped. So we know there are buyers stuck above bar 12, and the market is trying to make its way up. So we could actually sell from here. That's why I put this alternative zone. So it looks like we're trying to extend further up. Yeah, you can use bar 4. Look, measured moves. I made a piece with measured move a long time ago. I generally look at the chart and I just measure what makes logical, whether it's a breakout bar, good trading range breakout, good structural breakout. Like right here, this could be a measured move too, right? So here is a structure, a little bit of cup and handle. Here is the low. If I want to put my stop here, that seems logical. I don't want to put my stop here. That's too far away. That's risk higher. So where's the breakout? Hey, I could take that, or I could take this, right? But here is how I would do. And this would be my measured move target, 71.25. So it's just, I'm not after 100% accuracy, but if I can get market up there and take profits, I know I'm golden, right? I made money. Hey, it goes up. You could be holding a runner. That's great because we got a magnet there. What if it doesn't go there? Nobody knows future. But what I know is that I'm measuring with logic, and if my logic is correct, I'm going to keep seeing these bull bars closing and opening new ones, right? And if I get spooked and I see a really long upper wick and a bear bar close, I'm not going to sit there and wait for that measured move. I'm going to lower the risk because we have reached a breakout point. Bears broke down. So I know there are probably sellers waiting there. So I'm going to take whatever I can off the table, still can leave a runner with a small risk. I still can get that target and say, hey, I measured it right. I got spooked, so I scalped a little, but I held a runner, so I'm good, right? So it's all about staying in the trade as long as possible with a smaller risk. No one's going to hold this against you and say, oh, you're a terrible trader. You just got spooked so fast, and you exited out, and I held it. I don't care if somebody brags to me that they are a much better trader than me. I generally pay attention to what they're doing and what they're seeing. I try to learn from them, but I don't really care and take anything personal because he's seeing something that I may not be seeing that I can use that next time. So I don't try to take it personal at all. But I'm also not going to let anybody judge me and my trading skills because at the end of the month, I'm the one who pays for those bills. That person who's bragging could be on a sim trade, not on an active trade like me, okay? So they're responsible of their own bills. I'm responsible of my own bills. So if I think that this is a good area to exit with a certain amount of contracts, I'm going to do that because I'm already a winner anyway. So you can measure bar 4 too, but this is a structural break with a cup, small cup, and handle. So it can move up to 71.25. Basically, you're measuring this leg. Pull back with 4 and then go up. Beautiful. Remember I said we have inside, outside, and we're probably going to have an inside, and that could set up a breakout, and it could get another breakout. Market is trying to get to the 57, I'm sorry, yeah, 5,700. But now look where we are. So, hold now. But there's no sell signal. So this can still keep going up and up and up to even to the 66% pullback. But we will make possible double top, or at least have an attempt to make a double top. On the Globex range is, I have an Asia is range got a breakout. So it's 1.5 is, and then reverse back up. So the bears couldn't get their 2R. So that tells me is we're going to get 2R, possibly 3R target on the bullish breakout. So 1R, 2R, 3R. So we are so very close to the 3R, 70.25. I don't want to see a sell signal bar here, but we could easily get it. I no longer need this because we have broken above that. So this is the trap bar. So this is that institutional bar. This is the institutional, just like bar 20. So anybody invested in these two bars, those institutions, right? They went above 20, which we expected that would happen. Now there's another one. It's clear that the bulls got trapped there, right? So that they're trying to get back up there. So, but was it an intentional trap? I bet, because they're trying to trap other institutions. They will invest in a budget to put a bar like this. So it's probably trying to get to the high of that bar. But you know, I'm not there. I'm not an institution. I don't care, right? If goes up there, I want maybe 66%, which is literally the high of that bar, one tick above bar 12, which is great. I just want to know if I can get this measured move. So my goal is I'm going to stay in this trade with my runner, and I want bar 9 to close on its high so I can continue to stay in this runner. But we have gapped up quite a bit from the moving average. The market will pull back, except that it's a very tight channel, and probably the first bear close they're going to try to buy underneath. We might get 1 or 2 bear bars though. So it's a good close, not okay close, but it's not all that great. That body should have been a little bit higher. So there could be some buyers at the 50% or lower third of bar 9, or maybe even underneath bar 9. But we close a strong bear bar, we might get another bear bar before buyers show up again. So my conservative measured move, that's the target, and we have met that. That's the actually, I'm wrong. I'm sorry. That's the conservative. We haven't really met that target. We came, that's 69, that's 69.52 tick close, and failed. And failed. There could be machines front running. There could be traders front running, but it's probably going to tag it. Beautiful price action, but we've gapped up from the moving average. So don't have a bear bar yet to say that this is about to take profit, but I would definitely pay myself is as much as I can here, because you don't want to give back anything, right? You can always buy again if they show you a good entry. Because as far as I'm concerned, market can continue to go into 56.77, even 56.94 prior highs, and make a new high and get to the round number 5,700. So right now, they just need to claim this measured move from this trading range into the close yesterday, and that's 69.50. And then the magnet above 66% pullback. So nothing yet for bears. So you do have a climactic move up. It is not a small pullback bull trend. It's a climactic move, but it's a cup. Cup needs a handle, right? So we're gonna pull back. It's just I want to see if we're gonna get that 50% of this range, or we're gonna start pulling back now. Needs to go sideways. That's now the first sell attempt. I'm not gonna sell that. Not going to sell it, and I'm not gonna sell underneath bar 10 either because it's a bull bar. I don't think I'll be going anywhere far. It could create it could come down, test underneath 9 and 10, and then reverse back up because it's a small triangle there. But you are definitely in a sell zone. So we are going to sell. I just want to see a second sell. So here is possibly the first sell signal. If you do sell, you might make 3 to 5 points underneath, but it's going to reverse back up. So there will be a scalp, but the swing traders will look for this. Okay. It could come back 50% of this leg and then find buyers. It could come back 3 to 5 point and then find buyers. Weird. Okay. Inside bar 10. So it is kind of forming a triangle that tested these low. I mean, you can't really see it, but inside bar forms a triangle. So you can go to a 2-minute chart and see it. So the second entry already started. That's the first entry and that's the second entry, bears try sell. So you do have kind of a triangle here, but I don't like to, sell these. I'm not trading 2-minute chart, but I'm going to show you. Triangles are trading ranges, so it's a 3-bar trading range. You also have a micro double top, 9-10, neckline 11 now. There could be some sell orders underneath 11. Not a good sell signal bar, not a good buy signal bar. It was a contracting triangle turned into an expanding triangle. So I think it's a breakout mode, and I think the bulls are trying to go higher, so I don't want to sell anything. But if the bulls fail to go higher, there is a double top neckline formed. But I'm not ready. I don't like these sell bars. Don't want to sell anything. But maybe a second entry short. First entry short from underneath 10 is I need a second entry short bar that's strong enough. Then I'll entertain, but this has still room to upside and a magnet above. I need a better sell signal bar. I need a bar that closes on its low. Right? So, like, 3 is not a good sell signal bar. Actually, I'm sorry, it is a good sell signal bar, but they did sell. They sold at the 50% if they had a limit order, right? So, but then you got this. So what do? You're trapped. I'm only judging the bar due to how they close the body, but I would not have sold that one. Why? Because the bar 1 and 2 have lower dojis, lower wicks, and the bar 2 close bullish. So basically, it's up, down. It's trying to go up. So it's the context that made me not sell the 50% of bar 3. If bar 4 was a bear bar, I would have sold, expected this to be closed, gap, and then testing this bull gap area or high of 79. Then I would have scalped that and then look for buyers. But it's a bull bar engulfing. If you sold, you have to exit and reverse the position, buy above 4. So there's no point staying in a short trade and trying to scale in from above. You're just going to get trapped. Especially you get a second bull bar like 5 after 4. If you're still selling this, you either have no idea how this works and you don't understand what happens at the open is with Elbert's teaching, right? You have to exit. This is going to go up. It's a buy to close bars. So why don't you just watch this video. Here, let me post this. Watch this video this weekend. Elle actually shows at the open how to buy and sell. Hold on. Let me post it. It's from the YouTube, so it's available to everyone. Just give me a second. Let me grab the link. It's an oldie but goodie. Scalping during the open from the Las Vegas Traders Expo back in 2014, but it's really, really good. I would recommend you guys to watch and get a refresher. I'm looking for a second entry short. I've got a double top. I now have, what do I have? I have a ledge, but I don't like these kind of ledges. It has to be, it is identical. It's kind of close, so it qualifies to be a ledge. Okay. It might actually go up, trap and come down, but I still am not selling until I see a good strong sell signal bar. Trap and come down, but I still am not selling until I see a good strong sell signal bar. Bulls they're trying to get the breakout, but they seem to be struggling. So we get a bear body, I might sell it now. But you see what I said earlier, I don't know if anybody paid any attention. This is a tight bull channel, whether you measure from here. I said first break of the trend line, right? They're going to buy, they're going to fade it. So I said there are probably buyers underneath 9 or 10, and they're going to want to test the high. You see why I don't want to sell? There's no point of selling here. It's a strong channel. So but if we start to get the trap and the second sell bar, then yes, that's a double top neckline. We might come down and test the bar 11 low. We might even come down 50% of this leg, but I don't see the sell signal bar. I have no business of selling anything. At least, okay, so we got the measured move to the tick. So good job, bulls. Now, can they actually sell this expanding triangle from the upper trend line and then come down to the neckline, which is possibly bar 8 high, and then break the bar 8 high, which is the apex of the triangle, and then come down and test the lower trend line, which is from 9 to 11 low, 9 low to 11 low. I still need that bear body. I'm not interested. There is the magnet above, so the bulls are still pushing. If you have any questions, could you guys like tag my name or at least just say Rose, because I'm not sure if you guys are asking me the question or somebody else. I don't want to budge in or barge in any conversation on Discord. I tend to do that. Target is 73.25. Excellent work by bulls. But what was your sell signal though? Ox. So if you did sell, what was your sell signal? Do you see a good sell signal bar that entices you that the bear started to close a good bear bodies, you know? Do you see any? If you don't have that, don't bother. Don't give up on the bulls. Okay, this is a question for the day before yesterday. No, not necessarily. When you have this kind of move, Frank, look at the gap bars, right? It's coming down. So you see this bar right here. Forget about 9. Now look at 10. 10 is what I call an anchor. Okay, what is an anchor? Okay, so when you throw an anchor, this is me trying to be a sailor because my biggest dream is to buy a catamaran and circumnavigate the world before I die. So I'm into these new sailing terms. But anyway, so I learned about anchor, what an anchor is recently. So think about this as an anchor. When you drop that anchor, you're not going anywhere. Okay? So this means market is going to sell more, right? This is it. This is where bears claim the market. They say, we're too strong, don't try to buy against us, this is going to get leg or two down. So what goes to the left doesn't really mean anything. So what happens is that when something is this strong, it's selling too fast. What is the best way to get in? Yes, this is important because it's kind of a support here, right? So it's like a small trading range. Before going back up, right, breaking out, it's stalled here a little bit. So yes, that's okay, but this is an institutional level. When institutions see a strong sell like this, nobody wants to sell here. Everybody wants a pullback, right? So eventually when bar 13 was printed, it was a strong bull bar. So the bar 12 and 13 was trapped, laid by other institutions like Chase trying to trap the Bank of America, right? So or vice versa. So they're throwing money out to trap you, to go long, because you're thinking this is support and it's just going to reverse back, maybe sell higher, who knows? Nope, that's not the case. How do you know that? A smart trader would know if there is a structure here and a gap bull bars, if the bears are closing those gap bull bars and closing a strong bar. Now this is an anchor. This is probably going to go down furthermore if it's not a measured move down, and it was a measured move. So what you will do is that look for signs of bulls getting trapped, bar 13, and they start to sell immediately under, right? So what do? Mark that area because eventually this bar is going to be reclaimed again. So that's what the market just did now. Beautiful. This is how many legs now? Leg 1, pullback, leg 2, pullback. We're in leg 3 here. Market is trying to get to the first 6-bar 30-minute range open. So that's right here. That's a measured move. So from the 6 high to the 1 low, that's where it's trying to go. We now have a break above 66%. Market is trying to test this gap area now, but I bet sellers are here. So I'm going to get rid of this. So from here, either here is a gap, right, or all the way to here. I would take this as a gap. And we're just tested the gap low. So swing traders are still making money here. I did not exit with my runner. Even if I did exit, I would have probably bought again above high 1, high 2, bar 14, and still be making money. I didn't add anything. I could have added with the bar 13 close, but it's just testing the gap area, and so very close. I'm just holding still the runner. Now, where can market pull back? Can we actually take out yesterday's high? I'm looking at the hourly chart. I think the market is trying to make its way up to 87.25. Remember I said earlier, the market is going to go up to 77.25, and that might even push, if it starts to close bull bars above 77.25, it might actually go to 56.95 area, 94.95, which is the prior high right around here. But first we need to close above 77.25. That was my swing target. So now that we're above, Okay, here, that green line could be the target right there. So this is the target. That's a measured move of first 30 minutes, 6-bar trading range, which is a breakout. So now we can even extend above and test not just the 77.25. We're already testing 77.25, but we might also get the 82.25. If we close above this green line, that means market is going to push towards the prior high. But I don't know if the bears are going to allow this gap to be closed because their stops are probably up here. But this is amazing. This is total rejection, but we will pull back. This gap is way too strong. So if you didn't buy underneath 3, you should have bought above 4. If you didn't buy it above 4, you got 2 consecutive bull bars, 5, buy above 5 or the close of 5. Then you can just measure your 2R. That's your 2R, and you reached your 2R. Just measuring the 2 consecutive bull bars. Okay, so that you got that. Now, if you put your stop here underneath bar 1, then that's your 2R target. A little bit more room to upside. It should get to that green line. How about bar 7? So the Frank here says, hang on, can't see the half of your question. He says, how about bar 7 yesterday? Bull bought 1 tick above or close and trap. Do you think bull will try to get above bar 7 to release bull either today or next week? I mean, I think everybody else, if there are bulls trapped, even with bar 9, I mean, I don't know. I think what this is I don't think anybody's trapped. I don't think the bulls are trapped. Bulls know that this is a pullback and they needed to buy. So they're trying to bring market back up to the prior highs. But they know that this is strong. So they could be already breaking even somewhere here due to this gap. But we close this gap, those bulls still waiting here. They bought here, they'll be making even more money. But if they're trapped here and they didn't exit, or they held it because market is overall very bullish, so this is just a pullback. Remember, I said if we do pull back, we're going to test this trend line, and the buyers will be at or below the trend line, and then we're going to go back and test the highs. I said that several days ago. Maybe it was was I on Monday? Yes, I opened Monday. So I think I measured this on Monday, and I said we're definitely going to test these highs again. Now, can the market sell from those highs? Yeah, but selling will intensify if we break this trend line again. So we might need to go up there, make a double top. That would put us into a trading range. So next week, what we could do, next week could be very interesting. We're forming a trading range here. We could go up, we could come down, we could go up, trap, come back down, right? We could go sideways like this, and then finally break, and this is my next target. But we have to go and test the highs. Too strong. Market is way too strong. And everybody knows that when market is this strong, these are good pullbacks to get back in the market again. So yeah, there might be sellers here. I think it's a lot better to see that above this hourly bar, there were sellers. So there were buyers, got trapped, and then the sellers showed up. So yeah, it's logical to say the market is trying to go up there. So that would be 56.90 and a couple of ticks above where market wants to test before coming back down. I would look at the higher time frame to determine where the trap traders are. All right, so we're right at that green line. And if we do close above it, then expect this gap to be closed and market to get to the prior high. Oh, I didn't mean to create extra work for you, Richard. I know you're already busy with the Orlando event. So if you hear this, I'm sorry. It's a good video. As is. So 2 hours met, market is still pushing. This is beautiful. So the gap will close around here. Let's see if they can push this, but we can't close a bull bar above this green line. We might be due to a pullback finally. Due for a pullback finally. But I think there's more room to upside, at least 86.25. I use it level. It's around 79, 80%. It's just so much that market moved. This area is kind of like a threshold telling me if a bar is closed above it, then we're definitely going to go and test the highs. But if we fail, this is it. This is the highest is pullback can go, and I should expect a couple of legs down. All right, what do I need here? So I do have 3 legs up. Is kind of, maybe it's exhausted, but bar 16 did close above that 79%. I think that's 79 if it's not 80. So I'm hesitating to sell. I don't want to sell anything. There could be buyers right here above 15, bar 15. It did extend a lot, but there could be still buyers here. So 86.25 is still target. Yeah, I'm not selling either. Yeah, I mean, we could get that. If we take out the prior high, oh yeah, sure. We would pull back a little bit. That would be the cup and handle, but you would get a measured move. I would definitely measure this. Although how many times? Yeah, I would definitely measure this and project it up, this bear leg. But we have to take out the highs first. So that hasn't happened yet. So 86.25, I'm going to pay myself there. Because even if the bear gap is open 1 tick, that's still an open gap, and it could still reverse. So let's see if I can get that 86.25. Fridays are known for good breakouts, good swing trades. We had a really good, breakout, pullback, and go. It's just beautiful, but look where you are. It's a trading range, okay? So here's a trading range. We tested that, and now we're back up. So we're in a trading range. Up, down, up. So we know there will be sellers up here. So think about it. How would you find that? So I'm going to clean this up a little bit because all of these are done. I'll leave it there. This one is done. So if you are a bull and you see a clear trading range here, what to do? Well, measure this and divide it into 3 sections, right? There we go. So what does this mean? We're at the upper third. That means this is a sell zone. We're about to test the mid-range of upper third. That's where sellers could be, there or higher. And plus this gap is still open. Now it's closed a little bit. So just about that one. So it's potentially, we could finally get some strong profit taking soon. They're trying to tag that upper range midpoint, which is that black dash line. So basically the question here is, I'm sure you get this question a lot. Actually, I did get it this morning on the server. I've been trading with 40,000 account. Is one contract is should I drop down to I think you meant to say micros, not E-mini, and trade less, say 4 contracts. You're already trading with one E-mini. You're asking me if you could trade with, and I know why is you're asking that, but I think you should measure it this way. I think you should measure it by not just 3% max loss. That's a max. I wouldn't do 3. I would do 1 to 2% max, not 3. So the 1%, you have $400, right? So your risk is 400. That's what, if it's E-mini, that's 8 points. So you have a risk of 8 points loss there. That's not bad, actually, 8 points. But that's for 1%. So the 2% would be double that, right? So 16 points. I think you can afford that. You don't have to drop down to the micros unless you feel comfortable trading micros, and it doesn't bother you making less, right? It's about growing your account. So you can have a goal of growing your $40,000 account to $80,000. You could still do that with micros. It would take you a little bit longer, but you could still do that. Some people have tight deadlines. They have to have quicker returns, which I think creates a lot of risk. Wouldn't do that. But right now, 1%, you have $400 risk. 2% is you can go for $800 risk. So that's points. Think about points, how many points you can allow market to pull back against you. Well, what about getting a strong bear bar here? This is an inside bar. It's bar 18 is an inside bar, generally around bar 18, a couple of bars after. It could be a reversal, possible reversal, 18 bar reversal, or we're going to keep buying into the second hour close. First hour closed at bar 12, and it was a strong bull bar, so it kept going up. Still trying to reach the target area, which is 86.25 and higher. So we might actually end up keep buying into bar 22.24 and then get a reversal on the 5-minute. Unless we get a surprise bear bar, even that, it can get a couple of legs down, is maybe 10 bars, 2 legs down, is towards halfway between the high and the moving average, and then still reverse back up. Yeah, I was actually going to say it's time for me to go in there and look at the encyclopedia. Sorry, I was too busy trading. So sometimes when I'm in trades, because we trade too and our money is on the line, we have a hard time opening up the encyclopedia, but I was just getting ready for that. Thank you for the nudge. So let me take a look. Yep, we're getting a possible 18 bar reversal here, but you're selling against a tight channel, but it is a good place, right? Except the problem buyers waiting not so far away, wanting to get back to the 86.25. They're going to try to trap you, just so you know. So here, some kind of news came out, I think. I don't know what that is. Yeah, there is a Forex meltdown happening. I don't know if you guys read about this or heard about it yesterday. There's now investigation of Japan is intervening with the Forex market overnight, 3.5 trillion yen. What? Oh my gosh. I don't even know how much money that is. So BOJ accounts suggest Japan intervene FX market overnight. and they were interviewing the Japanese officials, and they were saying, we can't comment on that. We're not going to admit that we did that, so we don't get fined. But aren't you glad that we're trading the futures market, not the Forex? Anyway, so here's a bull trend from the open, pretty strong. It has to go sideways. And the good news is that, you see what I said, even if you sell here, they could trap you. They did sell here, but they had a good sell signal bar. We don't have a good sell signal. We do have an inside bar. It's forming yet another triangle there. Even if we do sell, I think we have to first test this and higher. We might come down in the middle and not reach the moving average. So we could go up, form a trading range, come back down, and then we could do this and make a new high. Then late afternoon, we could finally sell. So whether it's bar 48.50 or bar 59.60, we might start to pull back underneath moving average. But we have to form a trading range. Okay, when something is this strong, more than 20 bars, yes, we will come down to the moving average eventually. We have not tested the moving average since open, so we are going to test it, but that may not happen later on. So we could do this, okay? We can literally bypass and not touch. We kept going, and the moving average goes with it. So every time you see a two-legged move down, you sell and you get trapped. We make a new high. You sell again, right? And then we don't touch. We go again. Then we make a 1, 2, 3 wedge top. Then this is where I would like to see that pullback, okay? That would be great if we can actually reach that 5,700 and finally pull back. But what about then going higher? That can happen. So let's take a look at that. This one actually touched, bounced very quickly. You can buy above the bull bar or the inside bull bar, the closing above 2 bull bars. Just buy and expect the prior highs to be tested. If we cannot get the breakout and you count maybe leg 1 pause, leg 2 pause, leg 3, then you see a strong inside bar sell signal, maybe time to exit. We can move down with 2 legs, 3 legs. But right now, I think we need to form some kind of a trading range. May or may not touch the moving average. At the end of the day, it might actually touch the moving average. It's going to test the moving average. 99% of the time, it will test that moving average. But it's just too climactic, and it's got an objective. Test this gap and try to close it. Consecutive buy climaxes. Small pullback. This is a small pullback bull trend. Remember I said this is not a small pullback bull trend? Yes, it's buying every pullback, but it's very climactic. So, but even then, it comes back to the moving average and closes under at the end of the day. Target is 86.25. There it is. If we fail to close this gap, then I'm going to look for a couple of legs down. Pay yourself around 86.25. If you want to hold a runner, targeting the prior highs, high of week, high of yesterday, 5,700. But we're in a trading range, big down, big up, and we're in a sell zone. So if the bulls close this gap, meaning we close a bull bar, they will buy the pullback, and then they will target the high. Today I'm half day, so I'm going to take some questions towards 11:30, 11:45 before Brad Wolf comes in. So don't go anywhere. Today is full day. Here is a gap from the moving average at the open. Small pullback and then it starts to go up and up and up. So it's kind of climactic here, but 3 pushes. You see that wedge top? And then it comes down, but it comes all the way down here. We don't have this kind of trading range. The place that we could pull back, if we do pull back, that's around here. So there was some kind of a selling happen there. So we might actually pull back or come near, but there's a gap here. Bar 13 is, we'll try to keep the gap open. So if you look at the line chart, look at these gaps, right? So market is clearly trying to get to the prior highs, but we're in a danger zone here. This is a gap, ton of gaps, so. But leg in a trading range. Big trading range. University of Michigan sentiment actual is 66%. Forecast was 68.5. Previous was 68, so it's in between. Not really in between. It's actually less. So I think that's the news just came out. Leg 1, leg 2, leg 3. Here's pullback. Second pullback. Tight. We might pull back to this trend line and then buy again if we do pull back. They're trying to close the gap. They're trying to get back to the bar 7, bar 8 highs. We did slight gap up from the moving average. It's not that all that significant, but we kept the gap open to the moving average. We are going to come down to the moving average eventually, and then that could bring us sideways. I believe we're going to resume the trend from the moving average and make a new high, but then we will come back down to the moving average. If we don't come back down to moving average now, well, that's bar 21. We might start to descend around bar 35, 39, maybe 38, 39, 40. Descend around bar 35, 39, maybe 38, 39, 40. I want to see if they're going to be able to close this gap here. Eventually, we do come down. If we cannot make a new high, it's sideways and down, but we stay in a trading range. Because anything this climactic and bullish, it still needs to go sideways and form a trading range. $86.25. Okay, we're started to show some signs of sideways. But I'm not ready to sell anything. There's nothing here yet. Oh, yeah, slower sign. I haven't looked at that. Hold on, let me turn on the Thinkorswim. I didn't even turn it on today. I was just too busy buying. Just give it a second for Thinkorswim to open. Okay. Yeah, slow RSI is still in the buy zone, and flat still going sideways. No signs of exiting the buy zone, so it still sees targets. Even if it comes down, the bulls could buy the pullback as long as the slow RSI is still in the buy zone. So it's still bullish. There's no, it's going sideways, but could be another small flag here. Inside bar 21. We're getting closer to the second hour close, bar 24. we might need to, this is a spike pullback, we might need to make a new high and then come down. So buyers around bar 19 low. We could pull back around bar 19 low and the buyers could be right there. Or bar 18 low, somewhere here. Maybe even 20 low. But it can pull back all the way down to the bar 19 low. This trend line is a target. We could test it and then go up again. Buyers are at the close of 19 and open of 20, bar 20. They will start to buy again there. Now, this could form that second sell here, although we made a new high, but we've been pushing it some time. I think the buyers are still here, maybe at the 19 low latest. So around like 80.75, 81, 80.50, they're there. There. What do the bears need? They need a strong bear body close. Then they will put a limit order in the middle of that bar and then try to look for a pullback and sell. Pullback and sell. But the buyers are not so far away. I'm not selling anything yet. You can get in underneath 21. It's an inside bar, but I generally like to see like 3 legs up, some kind of a trap. And then you might get 3 to 5 points down. But then we're going to probably go back again, test that bar's low. All right, decent close. I did say that we're probably going to test the close of 19 and open of 20, and we just tested. Decent close. We might need to pull back to the 50% of bar 20. Is that 22? Yeah. 22, and see if there are any sellers there. I did say buyers are right here. And bulls trap buying the first bear bar close they see, trying to get in the middle. There might be some limit sellers right at the midpoint of 22. It's still a bull market. It didn't really turn down. I'm hesitating to sell. If it starts to sell, wants to test this trend line and break that trend line and go right back up and form small head and shoulders pattern and then sell more. I like to see one more push up, get exhausted, make spike pullback channel, 1, 2, 3, wedge top, and then sell. Looking to see if there are any sellers here at the 50%. We are testing the 50%. There might be some limit sellers here. So if you put a limit order right here, sell, and put a stop above, so you should be able to get 1R right there and 2R. So we could come down to the 19 lows, and that's where I was getting that 19 low. And then it could swing from there if it breaks this trend line, but most likely it'll bounce. That's just about 1 hour. Very conservative. No bear bar. But bears probably want another leg, unless this is leg 1, pull back leg 2 already. I would assume they want this target right here, 80. And then reverse back up. Or just go back up again and then get a second entry short. It's difficult to sell, but it's going sideways. It's just very difficult to sell. You can't sell. It's pullbacks. They're buying the bear bars. Look at the close of is 18, and then they bought it even under. Now look at the close of 22, and then they even bought it from under, right? But bears want another leg down. So as long as this 50% area holds with the stop above, bears want this target. If the bulls take out these 22 high, then that's it. We're going to make a new high. But let's just wait, because these bears kind of earned it to make money here, at least a little bit. It is a triangle. Bulls want probably final. They just want to get back up and close this gap, but it's still kind of holding here. If the bulls close a strong bull bar, then bears are done. This is going to make a new high. This is why it's so difficult to sell. When the market is this bullish, you should just buy, not sell. And you could see that they barely made that 1 hour, and now they want to take out the high. Remember, I said this could go all the way up to 95, the prior highs, 94, 95 area. What about bulls cannot take out the high? And then suddenly we get a bear body. That'll be the second entry short. But bulls need to fail to take out the prior high. They're already trying here. So almost there. Bears should not have let this happen. That's a new high, and this is done. See? It's very difficult. They're buying, and that's why I said we need the third push up. And that's a wedge top right there. Maybe 1, pull back 2, pull back 3. Someone's asking me a question. I'm just going to step out just for a second. Be right back. There's a bit more room to upside. You may want to go and test is 56.90, 90.25 or higher. Just tested the trend line and it's trying to bounce. Could go to 90.25 and maybe even a little higher. Gaps are still open. Bulls are still trying to close this bear gap. So 90 to 90.25. Maybe we could just go and test maybe 1, 2, 3 tops. I don't know. It's still very bullish. Difficult to sell. I don't want to sell against this. It's still trying to go up to 90.25 and a little bit higher possibly before coming down because of that gap. Hopefully they can close this gap and we could just keep going higher. But we are making a double top here. Bar 27 went one tick above this small trading range, and they're now trying to trap the bulls, and it's an expanding triangle, and that's the support. But if we break it, we could come down here. A little bit more room to 90 to 90.25. If it accelerates up, we could end up going to 5,700. Cassandra, you could just right-click on my profile photo on Discord and get that information. I'm going to be wrapping up the session. I'm getting very inundated with all sorts of questions there from the workers here. So I've answered as many questions as possible in the Discord. I opened the question box, but not many questions posted. So I'll just wait for another question or two before Brad Wolf comes in. No, Alan, that's not it. Basically, it's an outside bar followed by an inside bar. Cassandra, I think it's the link is expired. I don't know why that link is expiring. I'll just replace it. Just come back and take a look at it in like 10, 15 minutes. I don't know anything about AMP Cloud. Yeah, I don't use them. Yeah, the AC guys. So the mother bar technique that's being asked is basically, yes, it is the outside bar followed by an inside bar. So you're stuck in a trading range. Expect high and low of that bar tested before we get an actual breakout. So I use the high and the low of the outside bar as a trap area and gives me a good scalping opportunity. But once I get the signs of a breakout, then I'm going to play into it. Now, if you watch the bonus videos 15 and 16 under the Brooks price action course, Elle actually talks about how to trade that setup. Very clearly, it's 2 videos, extremely helpful. I would watch those if you want to learn and then apply my measurements around that outside bar to see where I find the limit buyers and sellers, where I see the traps and what I look for. I think it will make sense because almost you get these outside inside bars very often. Okay. Inside outside inside could be excuse me. Yes, it's a breakout mode. If the market is bullish, obviously you should look for a breakout to the upside, but all within the context, right? How many times the market push could this breakout to the upside be a final flag and a final reversal back down? So you have to look for that. Like you have your, you get those a lot. Like you have an outside inside here, right? OOI is right there. So you have an outside bar followed by an inside bar. At the low of the outside bar, buyers stepped in. We have a breakout from the outside bar 20, but we can't seem to get up. So this is where the price is still trying to go, but they're not doing all that great. So I'm looking for bulls to just push up, test the 89, 75, 90 area, and then come down perhaps. But if we start the descent, I'm going to be looking for bear bars, but we have a trading range here. Then we would test the low of the trading range. Maybe test of EMA finally, moving average. but remember, it's bar 39, 40. I said we might start to come down. I don't know if we're going to come down. We need to trap the bulls. So I think it's a great place to trap the bulls, either here or a little higher. But we could start to descend into the moving average. I do like Turkish coffee. I do read the grounds. I was actually reading somebody's fortune a couple of weeks ago. They made me. Not that I know anything about it, but, you know, just make up stuff. I think it's the L's fundamentals of bars, like the first couple of videos in the course would help you with that, Andrew. He talks about, he divides the bars and tells you where the buyers and sellers. It's basically a trading range. You divide any bar, think of any bar as a trading range and divide it into 3 sections. Lower section is a buy zone, upper section is a sell zone. All right, I am done with my session. I am ending this session, and I'll see you guys next week. You all have a great day. Don't go anywhere. Brad Wolf will join. Bye, everyone.
We've sold off testing the moving average, and strong enough bear breakout that I suspect whatever bounce we get will form a lower high and go sideways. The bears, they want to get an endless pullback, consecutive buy climaxes, but a trading range is more likely than the start of a bear trend. So as far as selling down here, it's selling in an area with bad risk reward for the bears. And I suspect we're probably going to have to bounce, but disappointing for the bulls. With 30 being as big as it was, a lot of traders were not interested in taking the buy above 31. So 2 legs down, 30, 32, and I suspect 33 will be bad follow through, leading me to think we're probably going to bounce. I would be out of shorts at this point. We could go a little bit lower, but chances are we're going to have to go sideways and bounce before the bears can get a credible sell. So if you're selling here and your stop's up here, that's not great risk reward. More likely we're going to bounce, kind of like on the daily chart. You have a really big bear bar here, but following a lot of bull bars, chances are we're going to go sideways rather than straight down. But this is damaging. Increases the probability that we're now in a trading range. You can see bears, they looked bearish on 32, but bottom of a likely trading range, and more likely we're going to bounce. Strong enough selling that I suspect we're probably going to form a lower high. Now, what do you do if 34, 35 are bull bars closing on their highs, and 36 is another strong bull bar? That will increase the probability that we get another leg up. In situations like this, I'll often buy the test down below 31 during 32. I use a wide stop, betting that we'll bounce, at least at a minimum, betting that we'll test the upper third of 31. And sometimes I'll take part off and hold to see what we get. Bear bar 36. There's 2 things I think here. One, I think we'll get a second leg down with the sell-off on the 15-minute chart. In other words, the sell-off 31 to 33. So it's possible we have a rally 34, 35, pull back 36. We get a second leg up 37, 38, and then we get another low. The bulls were not eager to buy the moving average. The next thing the bears want or need is control of the moving average. How do you get control of the moving average? You get control of the moving average by getting a lot of bars under the moving average. However, what's the dominant feature of the day? Obviously, the dominant feature of the day is the left, bar 1 all the way up to 24. And that's a reminder that the odds are a trading range is far more likely than a strong sell-off. So selling here, stop above 27, is really not ideal. Because the odds are the bulls buying anywhere up here, scaling in lower, as long as they use a wide stop and they're patient, you know the chances are they're probably going to make money. What about buying right here? Well, I'm not as confident that we're going to go straight up. I think 30 and 32 are a little bit of a surprise, and we may get a second leg down. But as far as probabilities, the bulls buying and scaling in lower are probably going to have an easier time. we're getting a second leg up, so buyers below 36. But I suspect a trading range is, again, more likely than the start of a strong bull trend or bear trend. By the time it looks bearish, 30 and 32, it's too late to sell. For those of you that are, let me back up. In a trading range, you count legs. It's critical to understand leg counting. And why is that? So for those in Discord, or feel free to answer this in the question box, but Discord will probably be faster and easier. Why is leg counting important in trading ranges? Who wants to take a guess on that? Second leg failures. Okay, so Rick, and are trading ranges filled with minor or major reversals? Second leg traps. Yeah, second leg failures, second leg traps, absolutely. They're minor. So you look at the rally all the way up to here. Is that a major or a minor reversal up? Obviously, it's major. And the thing with major reversals is the risk is big and it's really scary. Because if you're buying up here, you're buying far from the moving average, and it's so easy to look at it and think, oh my gosh, if I buy right here, what if the market just crashes on me? I'm going to lose a lot of money. And you have to trade small. But the reality is, anyone buying up here, even though it's not really the most ideal, the reality is, if you just don't buy and you look to buy at the moving average, you're probably going to be able to get in at the same price, worst case. But if you do buy up here and you scale in lower, chances are you're going to be able to make money or at least avoid a loss. And that's a very common thing. So you see what's happening? We had a sell-off, two-legged pullback. The bears want the second leg down. So this, I suspect sellers above and will probably test down to the 33 low. But again, I'm not willing to sell at the moving average. We've been bullish all day. If anything, I'm buying in this price level. We had a doji on 31. So it's reasonable to assume it's a spike in channel on a smaller time frame. Let me adjust these. So we had a sell off 30, pull back 31, start of the channel, and then we sold off 32. And we're testing the top of the channel. I'm a little bit, it's a little bit tricky. I think we're going to get a second leg down. So I think it's reasonable that we have to fall below 33. But I really don't want to sell at the moving average right in a bull trend. So that makes me think 50-50 chance. While the odds are we may have to test down and get a second leg, there's also maybe 50-50 chance this bear flag, the rally up to 35, pull back, second leg up 38. Instead of getting the second leg, we get a bull breakout of that bear flag. And that would lead to some kind of measured move. So that is what the bulls want. Measured move up from the 33 low to the 38 high, which takes you to a new high of the day. And we may have to get there. It wouldn't surprise me if we have to get up to a new high in the day. She have a low too short 39. Do you really want to sell it? It's a terrible looking short, and it's above the moving average. Bulls, they want an upside breakout and some kind of measured move. I suspect bulls will be disappointed with the bears, but the bulls have a chance here. Can 40 be a strong bull bar? Or will 40 be disappointing? Bulls want measured move up of the bear flag, 33 to 38. And bears, they want a wedge. They want to break above 39 and reversal back down. I think we'll probably go a little bit higher. I just don't know if we have to pull back first. But as far as taking the sell below 39, I would not. Bear bar, consecutive bear bars, 39.40, but small bodies, and both closing above the moving average, lowers the probability of selling below 40. Is 40 anyway similar to yesterday's 39? No. Here, we were in a strong bear trend and we had two legs up at the moving average. and both of the bars were below the moving average. So that's bar 39 yesterday. This is bar 39 today. This context is much different than yesterday's bar 39 here. That makes me think we're probably going to try and get the upside breakout. So where's the bottom of the range? Bottom of the range could be the 11 low. It could be the 13 low. It could be the 33 low. We have a bull breakout and a pullback. In other words, a trend line break. And that increases the chances that we're going to go sideways for a lot of bars. Sometimes when you get a very strong climactic rally in the first couple hours of the day, you just end up forming a tight trading range for the rest of the day. That is a possibility. So it is possible that we just form a boring trading range for the rest of the session. Let me see if I can pull up a chart from the encyclopedia. Let me see if I can pull up a chart from the encyclopedia. '39 is a situation where I'll often buy below it, betting that we're going to bounce for at least a couple of points. We may test the midpoint of 30, strong bear bar, where the market arguably became always in short, but I don't really think it became always in short there. 30 is one of those bars you can sell it if you understand that the odds are the first reversal 31 is probably going to fail. But here, really not ideal. You can't sell this and stay short. You can sell this and scale in, betting on lower prices. But here, this is not the sell zone, this is the buy zone. So we're getting a bull breakout. What's the very next thing we need? We need follow through. Good bar so far on 41. It'd be better for the bulls to see this bar close on its high. I just realized the screen's off. Sorry about that. So we have a bull bar. What I was saying is we have a bear bar 30 and we have a second leg down 31. I don't think 30 made the market always in short. I think 30 increased the probability that we're going to get a second leg down. So you can sell 30 betting on a second leg. However, as far as selling after 31, I would not. I did buy below 39 and I scalped out about a point and a half ago for 2 or 3 points. I thought about taking a chance to get the measured move, but I saw it as a scalp and the risk was small. By the way, I have Discord on the chat. I don't mind having Discord open, but sometimes the trading room chat has a lot of comments and it can be distracting for me. So I typically minimize it, but I have the question box open on GoToWebinar. So if you see that the screen is turned off or if you think I'm muted, just make a comment there and I'll see it pop up on my computer. So bull bar is 41 and it grew out bigger. That's good for the bulls. But what's the single biggest problem with 41 here? We're probably in a trading range. We're still in a bull trend, which means we can easily get up to 37. But I suspect 42 is going to be disappointing for the bulls buying 41. Now, as far as selling 41, I would not. It's a bull break out of a bear flag, and that increases the risk that we get a second leg. Therefore, if anything, as far as selling it, if anything, I'd be buying, betting on higher prices. But I'd rather wait and see what the follow through looks like. But you can buy the close. The risk is 1, 2, 3 legs up and a buy climax. But 41 is a pretty big bar, and that makes me think we'll get a second leg up. That's a good buying pressure for the bulls. The market dipped a little bit below 41, but not all that much, and started to go higher. So that's a sign that bulls are buying. This is what I was talking about in a trend. Even though it's scary buying up here, the odds are traders buying and scaling in are going to make money. I tried this on mute. Someone asked, was it reasonable? Let me adjust one thing. Someone asked, was it reasonable to sell the 31 close? I thought it was reasonable. The odds were you'd get a second leg down. And I was actually short on 31. And when 31 closed, I put a target in the bottom third of the bar. And then when 32 went down, I bought below 31, taking a chance that I would at least make 1 times my risk. So if I buy the low of here and I put a stop somewhere down here, the market's going to pull back enough to give me at least one times my risk, or 2 or 3 times my actual risk. So what about buying the close of 42? It's not a terrible buy. The odds are we're probably going to go at least a little bit higher, but you're getting high in the trading range, and that will increase the probability that we start to go sideways. But big bull bar 41, so far good follow through 42. That makes me think we'll probably go above the red line, the 27 high. Someone asked, could it be forming a bigger wedge after a spike? In other words, can it be forming a leg 1, pull back leg 2, pull back leg 3? It might. This is a little bit climactic, makes me think we'll probably go more sideways. And we dipped pretty far below the moving average. But strong, we're always in long, we're in bull trend. I'm not willing to sell after a bar like 41 or 42. You'll have some traders who sold the close of 41, disappointed with 42, and they'll look to buy back their shorts on a retest of the 41 close. But 41, 42, enough of a surprise. I suspect we'll get a second leg up. What do you do if you sold above 38 and now 41 and 42 are, if you sold above 38, or if you were short and then you see 41, 42, it's a bull breakout of a bear flag, and that increases the risk. We're going to go up to the magenta line up here, the measured move of the bull breakout of the bear flag. By the way, the euro versus the dollar, pretty interesting. This is the 7th. By the way, big buy climax, that's the risk. 2-legged pullbacks to the moving average. But let's go to today. We've had lots of buy climaxes. It's a possible parabolic wedge. One, you can call it a wedge here, parabolic wedge here, but lots of bull bars. My biggest concern for the bulls, we're at the top of the trading range, and that makes me think we're going to start to go sideways. But always in long, strong enough rally, second leg up likely. Weekly chart, starting to get strong bull bars. So we may, the bulls, they want a bull breakout of this triangle, and then they want to rally all the way up here. I don't know if they're going to get that, but as far as the daily chart goes, we're always in long, but a lot of overlapping bars. That increases the risk that we could pull back. But as far as selling, I would not be selling this. I'd rather wait and see more selling pressure. We've only had 2 bars, and they hadn't even closed on their lows over the past several days, ever since July. So 2 trading days have had a close below the open, so it's pretty bullish. But the context is not ideal, top of the trading range. But triangle, breakout mode, in general, 50-50 probability. Not getting great follow-through after 42, but I suspect 41 and 42 are strong enough that we're going to get a second leg up. So probably buyers below 43 in at least a small second leg. Part of the reason we're hesitating here is we're at resistance, the high of 27. That increases the probability that we're going to start to go sideways. Doji, 43, breakout pullback buy, so high 1, but not a good sell below 43. Increases the probability that there's buyers below, and we get a small second leg up. And I suspect we're going to go above 27. If you're a bear and you sell the close right here, you put a stop above 27, your risk is very small, and your reward is a possible test of the neckline, 33. So the bears want this. They want a double top, break below the neckline, and a measure move down. You know the probability is low. If you're risking 3 points and you have a chance to make 20, you have great risk reward and very low probability. The odds are we're going to go one tick above 27. Plus, if you're a bear and you sold anywhere down here and you put a stop one tick above 27, I mentioned it's a bad risk reward trade. And trading ranges are notorious for probing above resistance, the 27 high, and probing below support. It's good for the bulls. They prevented the market from falling below the 11 low. We went below a lot of bull bars though, so that'll increase the probability of profit taking above. But I suspect we're going to go at least a couple of ticks above 27 at a minimum. We're so close to yesterday's high that we may have to get there. High today, 95, 75. And what are the chances we get to 7,000? That's a possibility. On the daily chart, we did not reach 7,000. We came within about a little 4 points, 4.25. So a little less than 5 points. It's possible we rally up 7,000. I don't know if we will, but we might. So that is a possibility of a target. The 50s, and I said 7,000. Obviously, I meant 5,700. 5,700. The high of yesterday was 95.75. So we may have to get up to the 5,700 price level. Look at the 15-minute chart. That's a pretty strong reversal up, and that's a statement by the bulls. Bulls were glad to buy any pullback. This is basically a parabolic wedge on the 15-minute chart, and that increased the risk of a pullback. But parabolic wedges typically lead to minor reversals, and because of that, what do traders do? They expect the breakout. It's a parabolic wedge, but a breakout on a higher time frame. They expect the reversal down to be minor. So instead of selling it, they start selling out of longs, betting on a pullback, and then when they get the pullback, they start buying aggressively. So again, I think we're probably going to go above the high of 27. And then the next target would be the 5,700 round number. Pretty fascinating. We had a small doji and we were below the midpoint of the week. And now, obviously, the bulls looks like they're going to get the bar to close on the high of the week. So that's a strong statement. It looks like it's easy to look at this and think 5,700 is too far away. But if everybody agrees that we're going to 5,700, that could cause the market to vacuum up to it. If you're a bull, are you really going to buy? If you're a bear, are you going to sell right here when 5,700 is only 10 points away? Probably not. And because of that, you may get a lot of traders pulling their sell orders, pulling them, taking a chance that we go higher. So I think that is what the market is deciding on. Making a measured move of the open of 41, close of 42. Bulls, they want a measured move up here. And we might get that, I don't know. I think the most important target is the 5,700 round number. And I think that is what the market wants to reach. Traders will pay close attention to see how 45 closes. 45 be a strong bull bar, or will 45 be disappointing? Every tick matters on this bar. Obviously, every tick matters at any point, but the more this bar closes on its high, the greater the chance that we test up to 5,700. I was long, I just went flat, and now I'm trapped out. I ended up taking a chance and we're going to go higher on 41. I took part off when the market started to stall, and then when it rallied again and then pulled back again, I ended up getting out of the trade. It's not unreasonable to still be long, taking a chance that we get up to 5,700. But new high of the day, tail on the bar, makes me think we're probably going to pull back for at least a few bars. Bull bar, possible wedge, 42, 45, and 47. But there's one issue with the wedge. It's parabolic. You have open gaps, and it's a micro channel. That lowers the probability that 48 is going to lead to a profitable sell. But because it's 3 legs up, if 48 closes on its low, you will have some traders getting out. Why are we hesitating right here? This is the prior day's high. So we've got a measure move target, open at 41, close at 42, takes us to the high of yesterday. Let's make the line blue. And we have the 5,700 round number above. Do we have to get up to 5,700? Well, of course not. But we're so close to it that I suspect we probably will. We already touched 5,700. If we look at higher time frame chart, such as the 60-minute, this is the 60-minute chart of the Globex. And you can see we ended up touching it during the report bar yesterday. We rallied and then sold off. We don't have to get up there, but it's just such an important psychological round number, 5,700, and we're so close to it that I suspect we're probably going to reach it. What are the chances that today closes as an inside bar? We're so close to yesterday's high that I suspect we're going to go above it. Good buying by the bulls, and obviously a statement by the bulls on the daily chart. But we have a lot of climactic behavior. That makes me think, I thought we'd get a lower high in a second leg down. But obviously traders are buying it. The one thing I'm confident of is we're in a trading range. We're transitioning into a trading range. That can take a while. But I do not think, keep talking about the July low here. I think we're going down to the July low. I don't know how long it takes, but I suspect over the next month or two, we will fall below July. We'll form a tight trading range, maybe get another leg up. So maybe a wedge, 1, 2, and 3, and then sell off. But I suspect we're going to go down here. As many of you saw Al's commentary regarding the higher time frames, we have a wedge, 1, 2, 3. Bulls want a bull break out of the wedge. And you can look at that and say that we're going to get to 6,000. And it's possible. It is very possible. But I am suspicious. I think the market's probably going to pull back. So right here, it'll be interesting. It's the 12th, so we still have about half the month left. Is this bar going to close on its high, or is this going to be disappointing? If this bar closes as a disappointment bar, it is a wedge. I suspect we'll probably pull back. We have a measured move from the low of this bar to the high. We're really close to it. We're close to 5,700. Probably going to pull back. Also, this bar is a little bit climactic. At the moment, it's got a very small tail below the bar. And little overlap compared to the prior months. So there's bar 48. Still getting a bull bar. We're a couple of ticks above the below yesterday's high. Makes me think we're going to go above it. Same logic. Traders selling the close, putting a stop one tick above yesterday's high. You know there's probably a 99% chance at this moment they're going to get stopped out. And their risk reward is fantastic. It's incredible. They're risking a few ticks to make, maybe a sell-off all the way down here to the low of yesterday. But you know they have probably a 1% chance of that right at the moment. Maybe it's more than 1%, but you get the point. The odds are we're going to go above yesterday's high. So parabolic wedge, 1, 2, 3, but we're not getting a good buy signal bar, and we're getting a bull bar closing on its high. That makes me think we're probably going to the 5,700 round number. I think this is mostly due to the fact that traders see the 5,700 round number, and they're hesitant. You have some traders selling right here, taking a chance that the market's not going to reach the 5,700 price level. But we're so close to the magnet that I suspect we're probably going to get there. Bears, they want to prevent the day from going outside up, or they want to prevent the day from breaking above yesterday's high. They want to keep the day as an inside bar. But we're so close to yesterday's high. It's a blue line that's about 2 points above and the 5,700 round number that I think we're probably going to get there. Measured move from the low of 33 to the high of 27 takes you a little bit above 5,700. 15-minute chart. What I'm looking at is where did the market become clearly always in long? Maybe here. So some traders might put a stop all the way down here, the low of the Globex session, taking a chance we get a measured move up. Takes you right there. But either way, we're so close to 5,700, I suspect we're going to get there. A lot of times in this situation, which I'm still long, taking a chance we're going to get to 5,700. In situations like this, I'll put a target 1 point below 5,700. And it looks like, so price just came within 1 tick of my target, 8.75. So it looks like we're not going to be able to escape the magnet. Why not put it at 5,700 or a couple of ticks below? You probably could. We tried to test 5,700 yesterday. Here, we didn't quite get there on this chart, and then we're trying again. You can argue the Globex chart, we went above it, and now we're trying again. So the odds are we're probably going to go above it. But it's such an important round number that I want to make sure I get filled. And if this bar closes as a weak bar, I may just exit at the market. That audio connection has been restored. Let me check Discord. Can everyone hear me okay? I'm talking on the microphone, so the audio should be very clear and sharp. Okay, great. So I just wanted to make sure that what I was talking about a couple of minutes ago, I was long from up here in my target. It's come within a tick of my target. My target's 99 even, and it touched it. It came up within 1 tick and pulled back. I set it to 99 even because I think we're going to 5,700, but I want to give the market room in case it pulls back deeply. So good buying pressure. A little bit climactic with 49. Makes me think we're probably going to pull back soon. I have this wedge drawn, 42 to 47. And the reason is an example of a parabolic wedge. Parabolic wedges are not great for reversals. And the reason they're not great for reversals, let me just see if I can find an example. Oh, let me see here on that one. I just looked back and I got filled. Oh, let me see here on that one. I just looked back and I got filled. Here's an example, parabolic wedge. And you can see 1, 2, 3 pushes. It's a buy climax. It led to a two-legged pullback, but it's a minor reversal. There's one specific chart I'm looking for. Yeah, kind of like this. Parabolic wedge, 1, 2, 3, but 15-minute chart, tight bear channel, breakout, and it got a second leg down. So we're right at the magnet. What about selling here? If you sell it, you probably need a wide stop, maybe 10 points above 5,700. And I'd say I'm really not, it's tempting to want to do that, but it's really hard to manage those trades. The market often will go further than you think against you. It's like selling this when it's climactic. Yes, the odds are it's going to pull back, but it can go really far. And if you sell here or here, you can have a very deep drawdown. So really not easy to take those trades. For me, I like to think about it like this. We're in a bull trend. I only want to look to buy. And I can always take profits in the bull trend, but if the channel's tight, I'm only interested in buying or buying pullbacks. Obviously up here, I really don't want to buy because we're climactic, we're high, we're at 5,700 round number. I think the reality is traders selling here and putting a stop somewhere up here, they're probably going to make money. And I know I feel like an idiot sometimes saying that this is going to probably go sideways and reverse down. And the reason I feel that way is it's fairly climactic. We've had a bull channel, and then we have a micro channel. 1, 2, 3, 4, 5, 6, 7 bars, climactic bar, and then a bear bar, and a big bull bar right here. What's the chances that this is going to be a measuring gap and go higher? In other words, think about it like this. Here's the risk for the bulls. Are we going to go to 5,800 all the way up here before we test down here? So if you're a bull, it's really difficult to be long here, especially on the daily chart. So I think the odds are we're probably going to pull back. But we need sideways trading. The bears have a sideways bar over the past 2 days, but they need more. Climactic rally. It's 12:30 Central Time, so 1:30 Eastern Time, and bar 40, basically bar 50. We've got about 30 bars left in the session. So ask yourself, are the bears going to keep the market up at this price level for the next 30 bars, or do you think we're going to get a tail on the bar? I suspect we're going to get something that's disappointing. It's always fascinating to me. You see this sell off 30 and then 32, and you always look at it, and it always looks like it's going to form a trading range. You look at this and you think, that's so disappointing. Chances are it's going to lead to a sideways and really not much further. But what you have to remember, let me show this on a 1-minute chart of yesterday. So there's the 5-minute of today. Big rally. Let me do it like this. What do you notice here? We have a big rally, deep pullback, big sell-off, deep pullback. This over here is right here on yesterday. So we have this tail on the bar. The market sold off and then pulled back to bar 13. The market sold off and had a 2-legged pullback up to here. The odds were it was going to form a trading range. That's the same logic on the 5-minute, just backwards. Big rally. Odds were we'd get a trading range. And in this case, the bears ended up getting trapped. Very dangerous. In situations like this, my tolerance to sell is very, very short. I'm willing to sell a pullback. I'm willing to sell the close of 30, taking a chance we get a small second leg. But the tolerance is very small. If 31 is an incredibly big bull bar, then I clench my fist and I close the trade and I move on. But when you get a second leg down here, that's it. That trade's over, and I have to be out of the trade because there's too much risk of a reversal up. So you can see we've touched the 5,700 round number to the tick, and we're hesitating. So this could just be a buy vacuum test of that price level. If you're selling 5,700, it's a little bit tricky because the market can easily go 10 or 20 points above it before it pulls back. But the odds are, you think about it like this, what's the probability that we're going to go 50 points above 5,700 before we pull back 50 points? And I think that's pretty low. But we can go easily, if you're selling here, going short, we can easily get up to 57.10 or get a big buy climax bar and then reverse down. So for me, I'm not interested in selling, although I do think we're going to pull back to the moving average. I don't have a lot of lines on my chart, and there's a lot of things I could draw on the chart, but one of the things I want to show is just understanding the structure of the bars. We don't need any of this information up here, yesterday's high, the round number. We don't need any of that on this chart to understand what's going on. We're in a bull trend from the open. We had a deep pullback 30. Odds were to get a second leg down, and this would form a trading range. I mentioned 39 is a low too, but it's a bad low too, and we may get a bull break out of the bear flag, which we did on 41 and 42, and then that reset the count, and now we're getting a rally. Outside up, let me double check. Outside, not outside up, it's a micro channel still. So we actually are in a micro channel. Let me just look here. Let me just look here. We're in a micro channel since 40. So from 40 to 51, that's an 11 bar bull micro channel. And 51 is a very climactic bar. That increases the chances that we're probably going to pull back here. So overall, what would I do here? I think it's just best to be flat. This is why I was concerned about selling 5,700 consecutive buy climaxes, but we could easily go 10 points above 5,700 before we pull back. So really not ideal to be selling. One of the methods that traders can use when they're long, as far as always in or swing trading, they buy above a bar like 41 and they trail a stop, maybe a measured move down or a scalp distance below, so 4 points, maybe 5 points below every bar. And at this point, if I was long, which I would not be, the odds are we're going to go back to 5,700. But if I was long, I'd get out below a bear bar or a couple of points below any bull bar. We may have to go up and reach this high over here from yesterday on the Globex chart, which was 7.75. And looks like we've gone okay, looks like we went one tick above it on the current bar. I'm flat. My last trade was buying. I bought here and I took part off during 45 and then the rest off. And when 45 closed, I was looking at the 15-minute chart and I thought, my thought was, this is what it looked like. And I thought, that's a strong enough bull bar, we're going to get a second leg. So I ended up just buying back a position. And then when 47, and then when the market rallied, I believe when 48 closed as a bull bar, either 47 or 48, I added to my position, and I got out 1 point below the 5,700. So I got out at 99 even. But up here, I'm not willing to buy, so I'm trapped out. Some people ask why I don't talk more in the room. And one of the reasons is I want to focus and think about what I'm saying, but also want the audience, you guys listening, to focus and think as well. When you're trading, you can only take in so much information. And the more thoughts you have and the more, especially when you're listening, the more difficult it can be to process everything. So the market is always in long, but I think we're going to pull back and get to the moving average. So up here, I'm not willing to buy. The risk is big, and that increases the probability that the market's going to pull back. So why are we pulling back here? Obviously, it's because of 5,700. We're probably going to touch it. It's reasonable to sell 5,700, but what I warned about was the market could easily go up 10 points before we get back to 5,700. If I said 47, obviously I meant 5,700. So consecutive buy climaxes, odds are we're going to pull back for a couple of legs. High one buy, but consecutive buy climaxes late in trend, probably going to go mostly sideways. We could easily get a new high though, so not really all that great of an area to be selling. But as far as buying the high 155, I suspect sellers above and a second leg down. You can see that entry bar after 55, bar 56 is a bear bar, and there were sellers above it. We're probably going to get a second leg down and get to the moving average, so sellers above 56, but I suspect buyers near yesterday's high. I think the magnet today is going to be yesterday's high and the 57 round number. The bulls, they want to close above it, and the bears, they want to close below it, but I suspect all of this is a buy vacuum, and we're probably going to enter the trading range for the rest of the day. As far as being long or short, I think it's probably best to be able to longs at this point and waiting. Bears, they can take a chance that we'll get a second leg down below 53, below the 55 low, but we may have to get a small second leg up after 55. But it's possible 57 is that small second leg. If 57 closes on its low, I would exit longs. Two legs down, but a trading range more likely than the start of a strong sell-off. So I suspect we're going to go sideways here. Probably buyers below 59 and more sideways trading. The bears, they want a bear breakout below the moving average and yesterday's high. But the bears need more selling pressure. What are the chances that we test back up to the 52 high? We might. For the bulls, it's two legs down in the trading range. Two legs down in a trading range more likely than a bear trend. But climactic rally, I don't think we're going straight down. But I also don't know if we're going to get back up to the 52 close. We might. I suspect we'll probably get back to the 55 high at 54 at 704.5. We'll probably reach that. But I suspect for the most part, we're going to be sideways here. You can see more traders buying below 59 than selling. So the question will be, are the bulls buying below 59 going to scalp out in the upper third of 59, or are they going to hold, taking a chance that we test higher? 15-minute chart, you can see this is two legs down. Sell off, doji, second leg. That makes it more likely that we're going to bounce. This is a trade I'll often take. You have a bull bar, bad high one. High one, you expect buyers below. You expect a pullback and then trend resumption. So pullback and then trend resumption up. Some bulls, instead of buying 55, they'll buy below the 55 low, taking a chance that we'll test up to the 55 high. Disappointed bulls bought above 55 and more at the 55 low, getting out break even here. But really, not what you want to see if you're a bear. If you're a bear betting on a downside breakout, you really don't want to see a bar like 60. You have bears selling here, trying to prevent 60 from triggering. They want to trap the bears, they want to trap the bulls and get a downside breakout. One of the problems with buying above 60 is it's above yesterday's high, and I suspect we'll probably dip below yesterday's high. But we tried 3 times to get below it, 51, 55, and 60. And I think the most likely thing is a rally and a test up to the 55 high, the start of the high one. Breakout pullback sell on 61, but I suspect probably more buyers below than sellers. So really not a great sell below 61. Makes me think we're probably going to pull back and test the 55 high. You can see a lot of the bears who sold the close at 59 are disappointed by 60, and they're using the sell-off on, let me back up, the bears who sold the close at 59 disappointed with 60, and they're using the pullback right here to decide what they're going to do. Do they exit on 59, buying back their shorts, increasing the chances that we bounce, or do they get the downside breakout? Here, I think the odds are we're going to go sideways, which makes me think we're probably going to test higher and go up to the red line, the high of 55. The bears, they want a bear breakout below 60 and a bear breakout below a bull flag. The high of 54, low of 60. They want to measure move down, which would take us to the high of 27. It would actually take us below it. Second entry buy, good for the bulls, probably going at least a little bit higher. First target, 55 high. Next target would be a new high of the day and a test of the 52 close. We may have to test up to the 52 close. High close of the day. It's less needed because 54, 55, let me back up, 52 was a bull bar by the close. But late in the rally, 53 is bad follow through, and then 54 went outside down. But because we're in a bull trend, trends, they're forgiving if you buy and scaling lower. That makes me think we'll probably bounce and allow those bulls out. So decent entry bar, 53. But we had a decent entry bar 62, but we had a decent bull bar on 60. And obviously disappointed bulls. So 63 is an important bar. It's an information bar. Are bulls going to be eager to buy, or are more traders exiting up here and we're going to go sideways? So right now, not a lot of eager bulls buying. Bears, they want implied low 2, low 1, 61, low 2, 63, but not a great bar to sell below. Reason it's not great to sell below 63 is because of 60 and 62. Not a good sell 63. It's a bad sell below it, but it's not a great follow-through bar either. So that might entice bulls to start selling out of longs near the 55 high. I suspect the upside is going to be limited. I don't think we're going to, well, I think we'll probably test near the 52 close. I don't think we're going to break out far above it. Chances are we're going to be in a trading range for the rest of the day. But we could easily get a second leg up. Strong rally, two-legged pullback. We could easily test up to the highs. I'm going to get rid of this measure move down because I don't think we're going to get it. Going sideways, so not a lot of traders interested in doing much of anything here. Probably buyers below 64 and at least a small second leg and a test of the 55 high. But really not a lot of traders buying. Not a lot of urgency to buy but far above the moving average. And that increases the chances that we're going to be sideways here. We tested the low of the close of 59 and bounced. We came within one tick of it. Close of 59 is 99 and a quarter. The low of this bar, 99 and a half. Then one tick of it. Close at 59 is 99 and a quarter. The low of this bar, 99 and a half. Bad sell below 64. And we have that red line, the magnet above, high at 55, as well as the 52 close. Makes me think we're going to go at least a little bit higher. I'm not sure if I was on mute or not when I was showing the 1 minute chart, but the reason why we reversed up on 65 is because it's a parabolic wedge on the 1 minute chart. We sold off, paused, second leg down, pause, third leg down, and this means this close right here, which corresponds to the prior bar close, that was actually a very bad sell to close bar, parabolic wedge, low in a tight trading range. That increased the risk of reversal up. Those are things I'll look at sometimes. And but more importantly, the reason why did I show the 1 minute chart? Because the 1 minute chart is, the markets are fractal and smaller patterns make up larger patterns. That means big bars that immediately reverse, big bars like 24, big bars like 25, they're usually a variation of a parabolic wedge on a smaller time frame, like a 1 minute chart. And the structure of the bar is important. The faster the bar reverses up, the greater the risk that it gets a second leg. This is what I was talking about. The odds are we're going to get up to the 55 close. How much higher do we go? We could go above the 54 high. We don't have to. I think we've met the minimum. We're allowing the bulls who bought above 55 and scaled in lower, we're allowing those bulls out with a profit. We may go a little bit higher and get up closer to 52, but overall, I think we're going to be sideways here. You can take the sell for a swing, but you're just above the moving average in an overall tight trading range. That lowers the probability for the bears selling right here. Reasonable for bulls to exit. Some bulls getting up below 67, 68, but late in the day, I don't think 69. 69 needs to do more for traders to start selling closes. More likely if we're going to bounce here and go sideways. First gap bar below the moving average in several bars. Not a great buy above, but not a great sell below either. Probably better to wait for tomorrow or wait for Monday. Getting near bar 72, and I suspect the downside as well as the upside are limited. Probably going to be sideways for the rest of the day. So not really great selling for the bears, but not a good buy signal bar for the bulls. Makes me think we're going to be in a trading range, and we're going to go sideways within the range of the past 10 bars. Always in bears, I'd get out above 672 if it closes as a bull bar. Too much risk that we bounce. Bears getting their downside breakout. Sell the close, probably going lower. Obviously, bulls should not have allowed this. Targets, 33 low is a magnet. Open of the day, that's pretty far, but we'll see. We already have a tail on 73. That lowers the probability of the market going much lower, but strong breakout. So too early to be buying. I suspect we're going to get down to the 33 low at a minimum. Because of how climactic we are on the higher time frames, you do have to wonder, although I don't think it's likely, I don't think we will, you have to wonder if we get some kind of sell vacuum into the close. We're obviously getting one right now, and I suspect the downside's limited, but obviously strong selling here increases the probability we're going to go at least a little bit lower. Midpoint of the day is 64.75. If you look at just the ES.D, it's 65 and a quarter. So we may try and get there late in the session, but probably sellers above 76 and at least a small second leg down. Tail 75, tail 73. Increase the probability we're going to pull back soon. But because of how climactic the daily chart is, it's possible that we close below the open of the day. So as far as buying here, it's too late in the day to be buying. And bear selling closes, they're short, stop above the prior bar, and they'll just trail a stop and either get out after, if maybe they get out a couple of points below 76 if it's an inside bar, or they'll just trail and try and hold into the close. Low probability, but it's possible we get to the open of the day. I don't think we will, but if everybody agrees that this was just a second leg up after Wednesday's buy climax, we could get a pretty sharp reversal. But probably profit taking before then. But as far as buying, betting on a bounce, I would not. I would either be short or flat. This is what I was talking about. We're plunging down. This is what I was talking about. We're plunging down. And this is all because of the daily chart. Nobody wants to be long up here. I was short, I just went flat. The risk is getting too big, and that increases the probability that the market is going to bounce. You know, it's really funny. It's always kind of one of those things where by the time it starts to look bearish, you know, let me just back up what I'm saying. This is a problem for the daily chart. It's not ideal. Why is it not ideal? You have a lot of buy climaxes, and you have a micro channel here and overlap. That increases the probability that the market is at some point going to reverse down. And what is the target? First target is 5,600. Next target is the moving average. And then the third target is going to be the July low, which I think we're going to reach all three of them. And the reason is we're climactic on all the other time frames. Big buy climax here on the monthly chart. A wedge, 1, 2, 3. Buy climax here, 1, 2, 3. Weekly chart, we're reversing down. And what did I say? One thing I mentioned, I may have mentioned it on the blog, or I may have said it, I can't remember. And if I didn't say it, my thought is this is a parabolic wedge. And the bears really want today to not be, the bears really want today to not be a strong bull bar. They want it to close below the midpoint, which is right where we are at the moment, 65.75, depending on if you're using the Globex or the day only. I think the risk is real that we could get down in the open of the day before the end of the day. Not the open of the week, but the open of today. It's not that far. The only question here is, my one thought is we're probably going to bounce. But if enough traders are stepping aside and agreeing that we're going to get to the open, we could do it quickly. My issue is risk reward. I thought about holding to the open, but the risk is big and we have a lot of bear bars down. And in these situations, I'll trail a stop above every bar. But what do you notice about the close of this current bar? Does anyone notice something about this bar? The open of the bar is the exact high tick of the bar. And typically, when the open is the exact high tick, it's climactic, and usually it pulls back. So the way I read bar 77 is, wow, what a gift. The bears are getting a plunge on a final bar at the moving average on the 60-minute chart and at the midpoint of the day. So let me mark the midpoint. Midpoint of the day is 75 1/4. I actually misread it. The midpoint is all the way up here at 75.25. But I think we're going to be sideways. So that is why I ended up exiting the remaining shorts. We had a trend from the open, bull trend, and the bulls, they ended up getting their second leg up on the daily chart. So first, let's just talk about the weekly chart since we're here. Weekly chart, parabolic wedge, 1, 2, 3, within a larger wedge, 1, 2, 3, and at 5,600, now 5,700, I think the odds are we're going to fall below the past 2 weeks, and I suspect we're going to pull back, which means we're probably going to get to 5,600 at some point today or tomorrow. Daily chart. We're in a bull channel, and we're getting several buy climaxes late in the channel. We're getting a tight trading range here. We have a bad buy signal bar above yesterday's high. Second leg up after Wednesday, July the 10th. Rally pullback second leg at 5,700. That makes me think we're probably going to pull back to 5,600 in the moving average over the next couple of weeks. And Monday, if we rally, I suspect there's sellers above today's high. We may not go above today's high. We may just rally and then sell off and then form an inside bar. And in that case, the bears would want an inside bar closing on its low. And then the 5-minute chart, we had a tight trading range going into yesterday. And then on the open, we had a doji, a bull inside. We had a bull bar. It was a bear doji bar. And that increased the probability that today was going to have a lot of sideways trading. Bar 2, we formed an inside bar, probably sellers above 3, and then 3, bear bar closing on its low. But a possible, you can argue a failed breakout of this trading range over here. The problem with the bear argument is yesterday was consecutive sell climaxes, and it's at support. The close, the low of Wednesday's buy climax, and that increased the probability that the market was going to go mostly sideways. Or, let me back up, that increased the probability that we we're going to break out and try and go a little bit higher. It was also reasonable for today to test the midpoint of yesterday or form a high 1. So I thought we were probably going to bounce today. I didn't think we'd bounce this much, but I did think we probably would bounce. 3, bear bar, but buyers below. 4, outside up, surprise, good for the bulls, probably going higher, breaking out of the trading range, so probably going to get some kind of measured move up of this overall range. We had a spike pullback channel. Top of the channel is the start of the pullback, yesterday's bar 13. So that might be a credible target for the bulls. Follow through buying on 5, good for the bulls. And then 6, we have another bull bar with a little bit of a tail, but 3 consecutive bull bars and only 1 bar closing on its low today in a tight bull channel. Probably buyers below in a second leg up. 7, doji, but probably buyers below. And then 8, a bull bar, but after the doji, 7, and then a bigger bull bar, 8, that overlaps a lot of 7. That makes me think we're probably going to pull back over the next few bars. So instead of traders buying new highs, they might look to buy pullbacks, the midpoint of bars. 9, smaller body, and a close barely above the close of 8, above the 8, 9 barely closed above the 8 high, makes me think pullback likely, but pullback likely means we'll probably fall below a bar like 9, but not go all that far. Then 10, another inside bar, increases the probability of sideways for a couple of legs, and that's what I was talking about. 11, sold off, closing gaps. Whenever you get a doji like 7, a doji is the equivalent of this over here. Dojis are reversals on smaller time frames, and those are tests. So it's a small spike in channel on a smaller time frame. Spike, pullback, channel, and you expect a test of the bottom third of the channel at a minimum. And that increase, and what traders do is they start setting limit orders to buy the midpoint of dojis. They'll buy the middle, the upper third, they'll buy the bottom third. And then when you have an inside bar like 10, that increased the probability of sellers above in a pullback. But sellers above in a pullback, it's not really a good sell. It's really better profit taking and scaling in lower or buying lower. really not an environment where traders want to be looking to go short, far too tight of a channel. And a breakout, it's a breakout, it's a micro channel, breakout on a higher time frame, probably buyers below, scaling in lower. Doji, 11, probably buyers below. And then 12, a bull bar. It's a doji, still buyers below and at least a little bit higher, probably going to test the top of the channel. 13, good for the bulls, close to the channel. Is 13 climactic? It is climactic, but it's so far a trend from the open, and the market can go a lot higher. 14, consecutive bull bars, good for the bulls, probably by the close and going at least a little bit higher. 15, 3 consecutive bull bars, probably buyers below in a second leg up. 16, another bull bar. Is it still by the close? It's still by the close. Odds are whatever reversal down we get is going to be minor, but it's getting to be fairly climactic, and a lot of traders would rather buy a pullback or buy closer to the moving average at this point. And then 17, bull bar. It's always in long, better to be long than short, but overall, I suspect sideways more likely than a lot higher. 18, bear bar, and then a doji. 19, looks like traders are beginning to sell and take profits above bars. And then 20, a bull bar, closing above the prior high, but I suspect sellers above 20 and more sideways. 21, inside bar, and then we sold off 22, but probably buyers below. And then 24, another bull bar, a little bit of a wedge. 17, 20, and then 24, probably sellers above, but small pullback, bull trend. That lowers the probability for the bears. The one thing the bears have going for them is the market's far away from the moving average, and that increases the probability that the market's going to have to pull back and get closer to the moving average. 25, bear inside bar, probably buyers below. 26, a bull bar, probably sellers above. And then you can see we went sideways for the next 3 or 4 bars. We had a high one by 26, but it was a bad entry bar, 27, 28. And a lot of those bulls who bought the high one, 26, would start reducing their position after 29 and then 30. A lot of those traders gave up. Strong enough bar on 30, I suspect buyers below, and at least a second leg down. So the first reversal up should fail, 31, but it's at the moving average, and that's an area of support, so probably buyers in this general area. Second leg down, 32, but probably buyers below the 31 low. For the bulls, it's 2 legs down in a bull trend, and worst case, it's a trading range at this point, so probably buyers below, scaling in lower. 33, bad follow through after 32. It's a bear bar, but 2 legs down in what's likely to be a trading range, not an environment where bears should be selling. If you're selling what could be the bottom of a trading range, and if you're buying what could be the bottom of a trading range. That gets trend resumption. In other words, if you're buying down here, it's actually good risk reward. Bulls are buying, and the odds are it's not going to go that much lower. And we could easily break above the highs. It's possible. It's a bull trend. Therefore, I suspect we're going to go sideways and at least test the highs. However, we have the 5,700 round number not far above, so we may have to get there. Bull bar 34, probably going to go sideways here. Follow through 35. Consecutive bull bars 34, 35. Probably buyers below in a second leg up. Strong enough sell off down to 32 that after a 2-legged pullback, we may have to get a second leg down. 36, probably buyers below, and then we got 37 and then 39. 38 and 39. 38 is a second leg up after 34, 35. Good for the bulls. Increases the chances that it's 2 legs up, and now the bears want a second leg down from 33. But the problem with 39 is it's a second entry sell at the moving average, and it's actually above the moving average, and it's a bad-looking sell signal bar. The body is small, and it overlaps. It's an inside bar with 38, and that lowers the probability. Probably buyers below 39 and a second leg up. And then 40, we triggered the sell below 39, but I suspect buyers below. And then 41, surprise, possible bull breakout of the bear flag, 33 low, 38 high, probably going at least a little bit higher. 42 consecutive bull bars, good for the bulls, probably going at least a little bit higher, always in long. I suspect we're going to try and get to the 5,700 round number. 43, bear bar, but probably buyers below. 44, a bull bar, breakout pullback buy, second leg up after, is likely after 51 and 41 and 42. And then 45, another bull bar, good for the bulls, always in long. And then the bears, they never got a bear bar, a credible bear bar to sell. We had a rally, 41, 42, pause, 44, second leg up, 45, and then pause, 46, another leg up, 47. The bears wanted 48 to be a reversal bar closing on its low. Then they could argue parabolic wedge, 42, 45, 47, but instead 48 is a bull bar. Whenever you get a parabolic wedge, the odds are, especially in a bull trend, the odds are you're going to get trend resumption. Just like when you get a parabolic wedge bottom in a bear trend, the odds are it's going to lead to a minor reversal and then trend resumption. And then 49, another bull bar, but I suspect sellers in this general area, but we could easily go 10 points above 5,700 before the bears come in. Another bull bar, 50, probably going to go above 5,700, and then 51, good bull bar, but getting climactic, and then more climactic 52, pause, and then you can see 54. As soon as 52 closed, you had a lot of traders disappointed. It's consecutive buy climaxes, and it's a gift for the bulls who bought anywhere down here. They'll use 51 and 52 to take profits. Then you got a pause 53, and a lot of those bulls who were long, they saw 53 as an opportunity to take their profits. They saw 52 as a gift, and bad follow through 53. So a lot of those bulls quickly exited at the close of 52, and that's what led to the sell-off in 54. 54 is strong enough for another leg down, and you can see it sold off, but then it reversed up, testing the breakout point at the 53 low. Breakout pullback buy 55, good bar, but terrible context right at the 5,700 and consecutive buy climaxes. We've been in a bull micro channel since 40 to 53, so that's a 13 bar bull micro channel, not a good area for traders to be buying and scaling in. But I suspect we'll probably reach the 53 low. Bull bar 55, probably sellers above. And then 57, second entry. You can see it tested the 53 low and reversed down. As far as selling 57, it's a low probability sell, but it's reasonable. It's not terrible. And you can see we sold off below the 55 low, but I suspect buyers below. And then 60, bull bar, but 3 consecutive bear bars, 57, 58, 59, probably buyers below. I suspect we'll probably have to touch the red line, the 55 high. It was reasonable to buy there and scale in lower, like the 55 low. And then you can see the bulls, they failed to trigger the buy on 60, no surprise. Some of the bulls were disappointed. They were long below 58. They were long at the 58 low and disappointed with 59, the sell-off, and they used the pullback to exit their losing position. For the bulls, 62, 2 legs up, 60 and 62. But middle of a tight trading range, really not that great of an area for traders to be selling or doing anything, for traders to be buying or selling. Bulls, they tried to get the rally. We paused on 65, and then we reversed up 67, and then we got a bear bar closing on its low. For the bears, lower high major trend reversal, but tight trading range. They really need a breakout of the moving average. One thing the bears have going for them is we're touching the moving average and pulling back, but we're not reversing up from the moving average. And that's good for the bears. That's a sign that bulls are not committed. They don't see the moving average as a really good, let me back up. They don't see the moving average as a very cheap price to buy. Why is that? Because when the market sells off to the moving average, it only goes up a little bit and then tries to retest that price level. So traders aren't willing to pay far above average. And if that's the case, then you'll have more and more traders looking to buy below the moving average. And that could lead to a sell-off. 69, not good for the bears, but not a good bull bar for the bulls either. And then we got a doji, 70, not a good bar to buy. And then 71, another bear bar, micro channel since 67, and then 72, bull bar, and then a strong surprise, 73. Big enough bar, probably going to go at least a little bit lower. And then follow through, 74. So we're getting a bear breakout of the bull flag, 50, 33 high to the 71 low, and I suspect we'll probably get down to the 33 low at a minimum. We've already reached that target, and obviously we sold off into the close. Sell the close, probably 74, sell the close 75, and then what about sell the close 76? 76 is a smaller bar than 75, and 75 has a tail below it, and that increases the probability that we're probably not going that much lower. And then as far as buying 77, too late in the day and too strong of a sell-off, you can see traders saw 77 as a pullback from the sell-off down to the 77 low. So some bears, they sold the low down here on one time frame, scaled in higher, and they got out at a new low. We can probably see it on the 15-minute chart right here. So consecutive sell climaxes, someone sold the low close here, and then we had a two-legged pullback. They scaled in, and they got out at the new low. And bulls, they started buying. So if anything, 77 is a buy below. Stop entries, you can buy above 4, 5, 6, really any of these bars. It's always in long. Buy for any reason. Stop. At least maybe a measure move down of a bar, or you can put it below 4. And then you can buy above 13, 14, 15, 16, any of these bars. And once the market starts going sideways and you start getting bear bars, a lot of traders will start exiting at new highs. And then somewhere in here, reasonable to get out. If you don't get out up here, do you exit your longs at the moving average? You can, if you can buy more, if you know how to buy it again. So it's a minor reversal, which means you might get one or two legs sideways to down and then a reversal up. So the bears, if they get out during 30, they probably buy again above 34 or 35, or as 41 starts to reverse up. And then bulls, the bears, if they're short, they get out above 34. And then bulls, they buy 34, 35, or is 40, or the breakout above 38, or the rally on 41. Bulls, they can buy 41, 42, really anywhere on the way up. However, once you get to yesterday's high and the 57 round number, I would not be buying. Too much risk of reversal down. And then all through here, it was actually dangerous to be buying in here. You're buying a buy climax right into resistance, the round number 5,700, and that increases the probability of reversal down later in the day. We actually had that. Let me talk about the rest of the stop entry. So bulls are buying, but where do they get out? I think they get out at least, you can get out anywhere in here, certainly 57, 58. And if you buy again above 60 or 62, you probably get out below 67. Bears, they can sell 67, and if they did, maybe they get out about 72, but it didn't trigger. Not really good area to get out. And then it's sell the close all the way down, and they can get out above the bull bar. And in this case, no bull bar triggered, and they would just get out on the close. So this was not exactly what I was looking for. Actually, let me check something here. Give me 1 second. And here's an example of a test of a round number 5,300. The market rallied and then it quickly sold off. Traders will sell round numbers and scale in, and then that is basically what happened here, except we're more climactic on the higher time frames. So it increased the risk of a reversal. For limit orders, limit always in. I pretty much talked about it, but it never went always in short until 73 or 74 today. But for limit orders, you can buy below 10. You can probably, I wouldn't buy below 3. You can buy below 10. And then probably sellers above, but small pullback trend, not ideal. I thought buyers below 31, buyers below 35, buyers below 36, even buyers below 39, bad low too. Buyers below 43, but it never triggered. And I thought sellers above 56, and probably sellers in this general area. And then that's probably it for limit orders. Obviously, there's a lot of buy the close and buy, implied pullbacks on smaller time frames. Like 11, that's an implied pullback on a smaller time frame. So you can buy below any of these bars betting on a second leg. And then buy the close, sell the close. Really buy the close probably 4. Buy the close 5, 6, 7, 8, 9, 10. Any of these bars. You can buy the close 11 or 12, betting on higher prices. 12 is a bull bar. That's the first bar of the day. Odds were it would go a little bit higher and it had good follow through. Consecutive bull bars, probably first reversal down is going to be minor and we'll get a second leg. So that was that first reversal down. So the odds were there'd be buyers here. And then up here, I think it's better to take profits and look to buy lower. And then as far as 32 is a better buy the close than sell the close. And then 41, 42, consecutive bull bars, probably buy the close and going at least a little bit higher. And buy the close all the way up here, and then probably sell the close in here. But you got to be quick. Let me take a look at questions. Okay, question. If you had to pick one, what's your most reliable or your number one go-to setup? Yeah, for me, it's always going to be always in trading, so swing trading. So I look at the market, and on the open, I wait for the always in direction. Bar 4, 5, 6, always in long, breaking out above the target trading range. Buy the close 6, stop below 4, and just hold long. No reason to get out anywhere in here. And if I do anything, it's still buy the close. So my only choice, it's still always in long. And anything is minor. So my choices are long or flat. Big bear bar, I might sell above for a second leg, but what I'm looking for is 2 legs down in the trading range and then a reversal back up. Always in long, 41, 42. Only thing in a bull trend, only thing I can do is be long, and then I can hold or be flat. And then if I get out of trade, maybe I get out of shorts, longs here, 57, which is reasonable, or above 55, or below 54, or below 53. And then here, not clear, always in long, but then we got a bear breakout, 73, 74, so back to always in short. So if I had to do anything, I'm selling when I see something like this. Someone said, when I'm talking about it, betting on second legs, what's a reasonable profit taking limit order? Yeah, it depends on context. Like here, leg 1, leg 2, at a minimum, I thought we would test the 31 high. And then my thought is we may get a bull breakout of a bear flag in a bull trend. So I thought at a minimum, we'd probably test these highs. And then if we had a strong breakout with follow through, then I thought the odds were increasing that we were going to test up to the 57 round number. If I'm selling something like 30, minor reversal against an overall bull trend, I suspect sellers above, second leg down, and then buyers. But it all depends on context. The stronger the breakout, the more I'm willing to hold for the second leg. If you're in a trading range and the more minor the move is, the less I'm willing to hold for a second leg. Good example, 55. Strong enough breakout to the downside, 54. Sellers above 55, second leg down likely. But the second leg's probably going to be brief and find buyers. Okay, question, what do you do if you sold above 38? Yeah, if I sold above 38, well, this is kind of what your expectation is. Had I sold above 38 and then here, and let's say that's my entry bar, what do you think I'm going to do? I have to get out of the trade. This is a strong enough bar, flipping the market back to always in long. One of the things I think most traders should do is if you want to understand limit order trading, get good at stop orders and really learn to understand stop order trading. If you can do that, you're going to be in a good start to understanding how to trade with limit orders. Okay, just reading through questions. Okay, question, if 61 triggers a scalp, is it worth taking? Well, it's not really, it's okay. It's kind of what I talked about. I thought 61 was ultimately just a retest of 55, and it's an overall trading range. So the bull's buying above 55, buying more lower. This is not the follow through you want to see. Just think about it. If you buy above 61, you don't get filled on 62. Now if you buy above 60, if you buy above 61, it's a bear bar, and it's an inside bar following 60, and then 62 triggers your buy. But you really want to be buying in an overall tight trading range. If the bulls were really all that bullish, don't you think 61 would have been 61 close to its high? If the bulls were truly bullish, wouldn't 62 let me back up. I know I'm being confusing. If 61 is a bull bar, wouldn't it be a lot more bullish if 60 is the bull bar? Wouldn't it be a lot more bullish if 61 looked like this bar 41? Of course it would. And instead it's a bear bar. So you had a bull bar 60, and then the bulls could not even trigger the buy on 61. And that's a reminder that the bulls are not all that bullish. Reversal up 62. Good for the bulls. I think we're going to test the 55 high. But do you really want that as your entry bar 63? That's the market telling us that we're probably going to be in an overall trading range. Doji, and then we got a small bull bar 64. It's a bull bar, but almost all of the bar is in the range of 63. So not a lot of strong buying. And then we went sideways. Always in traders, I'd get out below 67. So had I taken the buy above 60, I think it's wise to get out below 67. Okay, question. Is it reasonable to sell below 53? Here, expecting that the bulls will take profits. Yeah, I mean, you can do that, but question is stop placement. And I really don't want to be selling. If I sell below 53, there's buyers some distance below. So for me, for me to be selling, I'd rather look to sell above something like 55 and 56 after we've had strength and the odds favor a second leg down. Was it reasonable to sell above 55? Yeah, I thought that was reasonable for the reasons I just mentioned. Okay, so where do we go on Monday? I think Monday will be an interesting day. The bulls are disappointed on the daily chart, and I suspect there's going to be sellers above today's high and sellers in the upper third of the bar. So if you're a bull, and let's say you're a bull, and you bought the close on Wednesday. So you bought 88 even, which is not all that ideal. And then you had the pullback on the next day. And then the market rallied above your close, and you didn't get out. What are you thinking now? You're thinking, dang, I'm disappointed. I was hoping we'd get a strong second leg. We didn't get it. Maybe I should set a limit order back at 56.88. So if the market rallies on Monday, I suspect that'll be a level of resistance. But we're probably going to get a second leg down. So I think we're probably going to fall below the low of Thursday, either some point early next week. But we'll see. Okay, thanks everyone for watching, and I hope everyone has a great weekend.